Hello. Hello, everyone. Good morning, or good afternoon, or good evening, depending on where in the world you're catching me from. It's great to see so many of you here today. It's amazing. We've got people from all around the world. We've got people from Florida, from Melbourne, from Texas, from Phnom Penh, from Montreal, from Utah, from Tokyo, from Penang, from Singapore, from Ohio, from Arizona, from Philippines, from Italy, from Jakarta, and too many to mention. Really wonderful to see all of you, and welcome to the ninth Black Market event. That's right, this is the ninth year we're doing Black Market, and as you guys know, this is the biggest event for us every single year, and it's where you get the biggest sales. And I know many of you have been waiting for this end of the year Black Market sale to grab our investing or trading courses or playbooks at the biggest discounts for the year. So go ahead and grab it, take advantage of it, right? At the same time, welcome to my webinar, which is the first webinar in this entire series. I'll be doing about 4 webinars in total, right? So for my first webinar, I'm really excited to share with you a lot of exciting stuff that I've prepared. And I'm going to really focus on helping you to build generational wealth for yourself by investing intelligently and investing safely in this AI revolution that we are in. Well, we call it the fourth industrial revolution, right? And also going to talk about the recent happenings in the market. Recently, the market has been declining a bit. So is that something to be concerned about? Is that the bubble bursting? Or is this actually an opportunity for those of you who miss the first part of this rally? Is it a chance for you to get in at a better price? Okay, so be looking at all these things today, a lot to cover. And if you can hear me and you can see my slides, let me know, right? Just type a yes so I know that you guys are there. You guys can hear me. Okay, wonderful, fantastic. All of you can hear me. So I believe that some of you are here because you want to create another source of income for yourself, trading the financial markets, whether from home or anywhere in the world. And some of you are here because you've got savings and you want to grow your savings at a much better return so that you can build your wealth a lot faster and be financially free, financially secure in the near future before all the robots take your jobs, right? No, I'm just kidding, right? And so today I'm going to share with you exactly what it takes and what you need to do to achieve consistent profits as an investor in a stress-free, low-risk way. As you guys know, to me, the most important thing is to invest in a stress-free way, in a low-risk way. I mean, why be stressed up, right? And even more importantly, how do you invest in a way that's sustainable over the long run? Because we don't want to be like some people that make huge returns in the short term and then lose everything. We're not interested in that. We want to build generational wealth, correct? I'm also going to show you the exact methods that I use every day. And I show my students every day on how I manage my own investments, my own portfolio, which this year has crossed the $20 million mark. In fact, it hit about over 23 million in October. Then we had a recent drop. So now it's like about close to 21 million. But it's okay, right? Your portfolio can't go up in a straight line. You go through ups and downs, but over time, it will always go higher if you do the right thing. Yeah? So a lot to learn today. Take lots of notes. If you have questions, you can ask your questions in the Q&A tab, and I'll do my best to answer as many as I can at the end of the webinar. So stick all the way to the end for the Q&A session. All right, guys? Fantastic. Now, this AI revolution is not something new. As you guys know, I first talked about it 3 years ago during my 6 wave webinar. How many of you were there during this webinar called the 6 wave? This was, almost 3 years ago. I'm sure a lot of you were there. Some of you are new, you were not there. And if you're not there, let me do a quick recap on what I talked about 3 years ago, and let's see what happened since then. Okay. So if you take a look at the global economy and global markets, they are divided into what we call innovation waves. And these innovation waves, they last anywhere from 20 to 30 years on average. Okay. So what happens during this innovation wave? What happens is that a series of innovations transforms businesses, transforms the economy, and changes our life and creates a lot of new wealth. Yeah. So, for example, the last innovation wave was known as the fifth wave. So, the fifth wave over here, oops, give me a second. The fifth wave, this was from 1990 to 2020, that lasted for 30 years. So, what happened during the fifth wave? What was invented? You had the invention of software. Software was invented starting with MS-DOS, right? And then Windows, and then iOS, and then the invention of the internet. Remember that? And then now internet on your phone, the mobile internet, the invention of social media like Friendster, MySpace, and then we had Facebook, and now Instagram and WhatsApp, and the invention of cloud computing. All right. Now, how many of you honestly say that software has changed your life? Has software changed our life, both the way we work and the way we play? Of course, right? Has social media changed your life? For better or for worse, right? Has internet on your phone changed your life? Has cloud computing changed your life? Yes. We can't imagine living without all these things now. And all these inventions, they transformed businesses like Apple. They created new businesses like Microsoft, like Netflix, like Booking.com, which has Agoda, like Meta, like Google. All right. And it has created tremendous wealth. So during these 30 years, what happened? The S&P 500 gained 1,950% in 30 years. Now, this is despite two major crashes. We had the dot-com crash here and the great financial crisis, right? No, so despite two major crises, if you just hold through the ups and downs, in the fifth wave, you would have made 1,950%. That is about a 10% compounded return a year. All right. Now, that's if you just buy the whole S&P 500. If you knew how to pick the highest quality companies that make consistent profits, which I'm going to show you how to pick today, you'd have made double or triple that return. All right. So for myself, I made my first million, my first 5 million. In fact, I made my first 10 million during the fifth wave. So I built my first fortune there. I'm sure many of you did that as well. Okay. But how many of you missed the fifth wave? Either you were too young to invest or you did not know how to invest. Any of you missed the fifth wave? So if you missed the fifth wave, what's the good news? The good news is that we are now in the sixth wave that started about 5 years ago. We're in the fifth year of this sixth wave, right? And like I said, 3 years ago, this sixth wave will be the most revolutionary of all the innovation waves of the past. It would have the biggest impact on economic growth, on corporate earnings, and on stock market returns. So I'm here to tell you that the stock market returns of the next 5, 10, 15 years is going to be a lot more than the last 20, 30, 40 years. Okay, why? Because this sixth wave is the AI and robotics revolution. Okay, and if you recall 3 years ago, I said, what are the companies that are leading this revolution? 3 years ago, I mentioned these companies. I mentioned NVIDIA 3 years ago. Nothing new, right? I mentioned Palantir. In fact, I made a whole video on YouTube about Palantir, right? I mentioned Microsoft and Google and Amazon and Meta. And these companies have led this AI revolution so far. Sundar Pichai, the CEO of Alphabet, what did he say? He said that AI will have a more profound impact on our lives than fire, electricity, and the internet. Okay. Now, all of us saw how the internet changed our life. Okay. And if you think about it, right, today, every company in a way is an internet company, right? So although like my business is education, but we are built online, right? And no company can exist today without being online. Would you agree? Would you guys agree with that? No company can exist today without having an online presence, right? So, in other words, today, every business has to be an internet business or be extinct already, okay? Now, at the same time, today, every company is an electricity company. All right. Now, can you imagine a world without electricity? Now, we can't because when we were born, we already had electricity. Now, not too long ago, before the 1930s, electricity was not common in homes or in companies. Did you know that? So only in the 1930s, then more homes and more companies had electricity, and that transformed people's lives. That from there, you could have shops open at night. You could have manufacturing on the assembly line. That gave rise to products like the oven, the the hair dryer, right? The television, and the oven. So electricity changed our life. Now, why am I saying all this to you? Because if you think that electricity changed our life, if you think that internet changed our life, holy shit. It is nothing compared to the way AI and robotics will change all our lives. All right. So nowadays people talk about, hey, is this an AI company? Is this not an AI company? Let me tell you that in the near future, every company will have to be an AI company or no longer exist. How many of you agree with that? Every company will have to be AI enabled or no longer exist. Yeah. I can tell you that my company recently, we've been sending a lot of our staff to all be trained in AI. They have to all be trained in AI. And nowadays, if you graduate from university and you're not proficient with AI, there's no way you can get a decent job nowadays, right? So the old saying goes, AI may not take your job, but someone who knows AI will take your job very soon. Okay, so same thing. If you're in business, a business that deploys and leverages on AI will wipe you away from existence. So we are in this revolution. We can either be destroyed by it or we can capitalize on it to build our next generation of wealth. And I'm going to show you today how you can be that second group of people. You build your generational wealth on this AI revolution. All right. So since I presented this idea 3 years ago, what has happened? Let's take a look at what has happened, right? Now, the AI revolution officially started on 30th November 2022. Why? That was when ChatGPT was first released and people said, wow, my God, this is amazing. This, I can talk to this computer, it can generate poems, it can generate anything for me, right? That was the ChatGPT moment. So since then, as you can see, the S&P 500, since then, which is about 3 years ago, yeah, almost 3 years ago, it's up 65%. Yeah. Now, was it a straight line? Does the market go up in a straight line? Yes or no? Nothing goes up in a straight line, right? It goes through what we call ups and downs, right? So wave up, wave down, 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 wave up. And recently, the last 1 week, wave down. Now, the market recently is only down like 5%, and people are freaking out. Oh, God, we're gonna die some bubble. Hello, it's only a 5% drop. And my guess is we're somewhere near the bottom here, right? But in April this year, we went through a 21% drop. Okay. Last year, sorry, not 2023, we went through an 11% drop. So there will be ups and downs, but this entire wave, this entire revolution is very much intact. And I'll show you all the evidence in a short while. Okay. So the S&P up 65% in the last 3 years, big deal. Okay. Companies that are at the forefront of the AI revolution, that are involved in semiconductors, in AI software, they are up a lot more, as you guys know. Okay. So for example, one of the biggest winners, which I bought at $9, you guys have been following me, you know, a Palantir up 2,000% in the last, give me a second, let me just change my color here. Yeah, Palantir up 2,000%, NVIDIA up 991%, Broadcom up 500%, Meta 396%, Google up 200%, Tesla up 163%. As you guys know, this is the only one that I don't own. I own the rest of them, right? Microsoft up 100% versus the S&P up 65%. Now, how about my portfolio? Okay, so today I'm going to be very transparent. I always am. I show you my portfolio. Now, my portfolio, do I only have AI stocks, by the way? Do I only have AI tech stocks? No. You guys who are in my community, you see my portfolio every month, you know. What percentage of my stocks are AI related? Probably about less than, yeah, about 30%. 30% are AI related. The rest of my companies are all great companies, but not directly AI related because I believe you need to diversify to have a bulletproof portfolio that will do well in any economic situation, right? So my portfolio is up 109%, as you can see, over the last 3 years since the start of the AI revolution. And this is way outperforming the S&P 500. Okay. Now, for those of you who have learned how to invest through our investment courses, and those of you who have been investing together with me in the Ultimate Investors Playbook UIP community, where you get to see what I'm buying and selling every day, you guys have been doing very well. You know, you can see all the testimonials that we get almost every week. People like Chun Wee said, my investing journey was consistently losses over a decade, struggling to find a winning strategy until I discovered the value momentum investment course, which is the whale investor course, which completely changed my investment mindset and philosophy. In 2023, he was up 84%. In 2024, he's up 103%, right? And people like Juper, who is from Texas, originally from Philippines. He went to Texas, he's working in Texas right now, and he's on YouTube with me in an interview. Go watch that video. He said, Adam, I'm truly blessed to have you as a mentor for investing in life. Thank you a million times over. He did 242% in the last 3 years. Okay. And then people like Andrew said, here's my returns for 2024, up 83%. With my portfolio performance this year, I finally completed a full circle in getting back all my losses suffered in the stock market after 12 years. It is indeed a milestone for me. All right. And then, of course, the list goes on. So many people over here. I'd like to thank you and your team for making my investment journey profitable. Before I joined you as a student, I lost 80% of my retirement since it was invested in stock from the company I left. I'm happy to report that since I've been with you, I'm up 50% from where I started with 2 consecutive years, up 40% and 10x in Palantir. Thank you for helping save my retirement. So, you know, the decisions you make on finance will have huge implications on your life in the next 10, 20, 30 years. That's why it's so important to learn this stuff right now. So, $1 million question. Yes, we've made a lot of money the last 3 years. I made, you made, we all make together. But is the party over? Is it the end of the ride? Are we at the end of this AI build out? Is this a bubble that is bursting? Or are we still at the early stages of this AI revolution? I think this is the $1 million question a lot of people are asking, and that's why you're here today. Yes? Okay. Now, I don't mean to be rude. No, sometimes I wonder whether I'm rude sometimes, right? But let me put it in very diplomatically. Should I say diplomatically, right? If you think that we are at the end of this AI build out, that we are at this bubble, you have no freaking clue. I told myself I'm not going to be vulgar today, all right? But you have no freaking idea the tsunami, the tectonic, the transformative impact AI is going to have in the world. You have got no freaking clue, right? Okay. So today hopefully I'm gonna share with you ideas to give you a freaking clue. For those of you who have not been reading, who have not been catching up, let me give you that freaking clue right now. Okay. Now, the first thing to understand is that AI is in what we call a super cycle. It is not a fad. It is not a cycle. It is a super cycle. Now, what is a super cycle? A super cycle is defined by ChatGPT, okay? It's an extended period of strong, sustained growth lasting at least 10 to 40 years, okay? A super cycle lasts 10 to 40 years. And right now, How many years are we in the AI cycle that started in November 2022? How many years are we in? How many years are we in? We're only in year three. Year three, okay? This thing's gonna last at least 10 to 40 years. Now, let me show you this. So how did this whole thing start? So this thing started again in November 2022 with the launch of ChatGPT, right? And so it started with what we call text-to-text large language model. So you ask a question, it answers you. You ask another question, it answers you, right? Text-to-text. And then some of you know that now with you create text, you create images. How many of you have been playing with AI where you ask it to create a picture and edit a picture? How many of you have been playing with that? All right, so it started with Midjourney, and now there's thousands of software, right? And then we have got video, where I say, create this video for me. How many of you have been playing with that, right? You can now make videos and stuff like that. And so we had Sora, we had Veo, and now which is the most powerful video and image software? Which is the most powerful one right now? Everyone's talking about it. It is Nano Banana Pro. It is freaking amazing. You got to learn Nano Banana Pro. It is owned by Google, right? It's by Gemini. It is amazing, right? So we started with generative AI. So again, we have been doing this for only 3 years. And where are we now? We are now right here. Okay. And by the way, this is continuing to improve every single day. What is the next stage that we just started? From generative AI, what is the next stage that we are now only beginning to build? It is agentic AI, or what we call AI agents, right? Now, what are AI agents? They are digital agents capable of enhanced reasoning and decision making with minimum human oversight. So the large language models is like you ask a question, it answers you. You type something, it creates an image, right? Digital agents are like digital employees that work autonomously, and they can do many things autonomously, right? So for example, my company, recently we spent a lot of money. We sent all our staff to learn about agentic AI so that my staff in my company can now build AI agents themselves. So with AI agents, you can use the agent to do cold calling for you. We built an AI person that you can't tell is not a human being. It sounds exactly like a human, but it's AI that makes cold calls for us, for customers. We build AI agents to help us to book flights, to book hotels, to read emails, and to reply all our emails, all done by AI agents. And now my entire company is being trained in agentic AI. Okay. So the AI agent market is forecast to reach 42.7 billion in 2030. So how do you build AI agents? You have got many platforms. You have got Agent Kit by OpenAI. You got the Microsoft Agent Framework by Microsoft. And Google just launched the most powerful AI agent platform. How do you know what it's called? What is the most powerful AI agent platform? Just launched a few days ago. It's called Google Anti-Gravity. That's right. Go check it out. It's called Google Anti-Gravity. So with Google Anti-Gravity, you can create all these AI agents, right? Now, for those of you who find it hard to imagine what it is, okay? How many of you watch Iron Man? Iron Man, the movie? In Iron Man, Tony Stark, he had this Jarvis, which was an AI agent, which was this person that he talks to that can do everything for him. That is an AI agent. So in the near future, all of us will have an AI agent, right? Right now, you got to start learning to build AI agents. It's really powerful stuff, okay? Now, this will probably take anywhere from 3 years to 6 years to build out, all right? So another 3 to 6 years on that. Then what's after AI agents? What's the next leap? What's the next leap? The next leap will be physical AI. Basically, robots built with AI systems. And is this already happening, by the way? Is this already happening? Yeah. So the first place you're seeing it is in robo taxis. Okay. The robo taxi market is growing at a CAGR. CAGR means compounded annual growth of 91.8% for the next 5 years. 90% growth for the next 5 years for the robo taxi market is going to be worth $45.7 billion. Okay. Now that's already happening. So many of these things are happening concurrently. So right now, the robo taxi market is also starting now. Okay. Now, robotics. How many of you have been watching a lot of videos on all these robots already? It's pretty cool. Who has been watching all these robotics videos on social media? Cool and scary, right? So humanoid robots will be a 5 trillion market. 5 trillion in the next 5 to 10 years. Apple's next biggest business is building humanoid robots. Apple is now building robots that will work and live in our houses, in offices, in companies, right? Xpeng from China says the robotics industry will be bigger than the automotive sector. Now, let me ask you this question. In order to build all these AI agents and robots and robotaxis, do you need a tremendous amount of computing power? Yes or no? Yes. And the computing power we are now using is less than 5% of what is required for this entire build out that's going to take the next 10, 20, 30 years. We are just at the what? We're just at the what? Sorry, we're just at the what? We're just at the early stages. Now, how many of you are old enough to remember the early stages of the internet? How many of you are old enough to remember this sound? Let me play this sound for you guys. And let's see how many of you are as old as me. Hold on, let me see if I can play this sound. How many of you are old enough to remember that in the old days, to get online, it took quite a long time? Good. Now, how do I turn this off? Holy crap. Okay. Remember that, guys? Okay. Yeah. So right now, in the AI revolution, we are at that dial-up stage right now. We are just at this dial-up stage. Okay. We're just at this dial-up stage right now. Let's talk about robo-taxi so you understand the extent of that. Okay. By the way, which company is now leading in robo-taxis? Which company is leading in robo-taxis? Waymo, which is owned by Google, right? So Waymo, so if you go to San Francisco, you can see that a lot of the Uber rides on San Francisco, they are driverless. They are all by autonomous robo-taxis. And now Waymo is expanding to Miami, as well as Houston, Dallas, San Antonio, and Orlando, and very soon all across the US. Singapore, have you just read? Next year, Grab is planning their robo-taxi rollout very soon next year. So you can imagine that in the next few years in Singapore, there'll be more robo-taxis than human drivers in the next couple of years. It's going to be very, very fast. Yeah. China, by the way, China, do they have robo-taxis? Well, right now it's mainly in Wuhan, but now they're expanding to the 4 top-tier cities to have 300,000 robo-taxis. Okay. So Singapore is going to start next year. And yeah, there'll be no more Grab drivers in Singapore very soon. In the old days, they say, no job, drive Grab. Now cannot. Now all robo-taxis, okay? This is happening. Robots, let's look at robots, right? Have you been watching on social media, robots that are running marathons with human beings? Robots that are in fighting competitions? Robots that are in kitchens cooking now? And this is a factory robot by Amazon, okay? Now, currently, Amazon uses 1 million robots, 1 million robots in its factories. And it is looking to replace another 500,000 factory workers with humanoid robots, so that eventually 75% of the entire Amazon operations will be run by robots. Okay. Now, as an investor in Amazon, is this good news? as an investor in Amazon is good news. Why? By the way, Amazon's e-commerce business is the least profitable of its businesses. Their e-commerce business, their profit margin is only 3 to 4%. Okay? Once they fully deploy robots in all their factories, in their logistics, their profit margin can easily double or triple. Double or triple. Now, if you calculate the bottom line impact, their share price can easily double or triple just on this. Right? That's why my biggest position in my portfolio is Amazon. Although the share price hasn't gone up as much as Palantir or Nvidia or Google recently, but my bet is in the next 3 to 5 years, Amazon would overtake everyone. Okay, that's just my bet. All right. Okay. Now, so should you invest in robot makers, by the way? Should you invest in companies that make robots? The answer is I wouldn't. I would not invest in a company that just makes robots. Why? Because take a look. Look at how many companies are making human robots. How many? How many are there? There are hundreds and hundreds and hundreds. Not hundreds. In Suzhou alone, Suzhou, China, there are 2,000 companies that are making humanoid robots that are far advanced. They'll be far more advanced than the US robots that are much, much cheaper, right? So I will not invest in robot makers because it's going to be so competitive that in the end, all of them are going to make very little money. So instead of investing in companies that make robots, what do I want to invest in? What do I want to invest in? I want to invest in companies where all the robot companies have to use this product, which are robot foundational models. They have to train the robots, right? Okay. So which are the companies that provide the training models? Basically NVIDIA and Tesla, possibly, Alphabet, Meta. Okay. And more importantly, the GPUs. No matter what robot you use, you got to use NVIDIA. That's why NVIDIA is one of my biggest positions. So that no matter which robot company wins, NVIDIA will win. Right? So don't invest in robot makers because they will all kill each other. Invest in the things that they must all use, which are foundational training models and high performance computing chips. Now, let me give you an example, all right? If you look at the airline industry, now, the airline industry, has it been a huge growth industry, yes or no? Has the airline industry been a huge growth industry? Yes. Now, let me tell you something, right? In 1914 was the first commercial flight. In 1930, there were 400 airline companies. In 2008, there were 22. In 2020, there were 18. And since 1930, the industry in aggregate has lost 60 billion over 32 years since deregulation. There have been 86 bankruptcies in 40 years. So what does this mean? This means that today everyone takes a plane, right? The airline industry has been a huge growth industry, but if you add together all the profits of all the airlines in the world, the total profit was negative. They lost 60 billion in total. Why? Because there's too much competition. So as you guys know, one of my rules is in investing is what? I don't like to invest in companies that have a lot of competition because in the end, no one makes money, correct? I like to invest in companies where there's little or no competition. So if you take a look at the airline industry, none of the airlines made money in 40 years. None of them, okay? But which company made money from airlines? Basically, all the airlines had to buy planes from Airbus or Boeing, correct? Yeah. So you don't want to own airline companies. You want to own either Airbus or Boeing, right? But of course, Boeing recently has been doing very badly because of their plane crash, but Airbus has been the main leader of it, right? And okay, now same thing with the auto industry. Now, as you guys know, I never ever invest in auto manufacturers. I never invest in airline companies. I will never invest in robotics companies because they are just too competitive. Okay, in the auto industry, in 1919, there were 2,000 car manufacturers. 2,000. Okay, by 2009, there were three left. That means 1,997 went bankrupt. Okay, only three left: General Motors, Chrysler, and Ford. GM went bankrupt twice, or is it one time? I can't remember, right? Chrysler and Ford hardly make any money. Okay, and in the current day, there's only two left, which is GM and Ford. And of course, Tesla started in 2008. And now Tesla, their car business is also not doing well because they are being there's tremendous competition from the China EV market, right? So one of the things that's why I say I never buy auto car companies, I never buy airlines, and I'll never buy robots. It's just too competitive. But I want to buy companies where all these companies have to use their products. Does this make sense, guys? Okay, so this is a bit of a detour here. So let me share with you some more information on why we are just at the beginning of this AI super cycle. Now, recently, have you been reading that, oh, the companies are spending billions and billions, they're spending too much money on AI infrastructure? Have you read that? Yes. Now, let's put it into perspective. If you compare the AI build up today, this is today's AI spending, compare it to past industrial revolutions. As a percentage of global GDP, we are just here. The US telecom build out, the US information and communications technology hardware build out, the US electric motor build out, the US auto infrastructure build out, the US railroads build out was much larger than where we are today as a percentage of GDP. So as a percentage of global GDP, the current AI spending is nowhere close to past infrastructure build-outs. Okay? This article just came out yesterday. Google, all right, they said they must double their AI compute every 6 months for the next 4 to 5 years. They must double their AI computing power, double every year for the next 5 years. Okay? So this is why we are just at the early innings, right? So generative AI is projected to become a $1.3 trillion market by 2032. That's in 7 years, growing at a CAGR, which is an annual return of 42% over the next 10 years. What are the largest drivers of this generative AI revenue? It'll be, number one, generative AI infrastructure as a service used for training large language models and inference, okay? Digital ads driven by AI, which is basically Meta, Netflix, and Alphabet, okay? Specialized generative AI assistant software, AI servers, AI storage, computer vision and AI products, which is basically Meta and Apple, and conversational AI devices. So if you look at this table here, this is where the biggest growth is in. So a lot of the companies that I'm going to invest in or I'm investing in is going to capitalize on the biggest growth opportunities in AI. Now, let me ask you this question. Is it only AI? Is it only companies that build AI systems that will do very well? Yes or no? No. It is any company in every industry that will leverage on AI. So let me show you this table over here. Now, so far, you can already see the impact, right? AI is significantly increasing productivity and increasing profit margins of companies in all industries. This was just out a few days ago. The current profit margin of the S&P 500 companies is 13.8% profit margin. Okay. Now, the profit margin was 4.9% 20 years ago. So in other words, profit margins of companies have tripled in 20 years because of the increase in productivity, because of the recent deployment in technology and AI. So what this is saying is that companies are making more money today than they are in the past. So that's why the stock market keeps going higher, because companies make more money. It's very simple. Okay. This one. Okay. Now, this is by McKinsey. Generative AI could add 2.6 to 4.4 trillion to the global economy. In what way? In all industries. So for example, generative AI could add 600 billion in new revenue for the consumer packaged goods industry, 340 billion in value for banks. So a good example is DBS. Now, DBS is one of my biggest positions in my dividend portfolio. I've got over $1 million invested in DBS Bank. Now, I didn't invest $1 million, I invested much less, but it now grew to over $1 million, right? How many of you are invested in DBS Bank? It is one of the best banks in the world, in my opinion, okay? And do you know that now DBS uses over 100 AI and machine learning algorithms in financial planning, wealth management, customer service, virtual assistance, and fraud detection? So in other words, DBS is an AI company. DBS is an AI company. That's why DBS has overtaken UOB OCBC significantly, because it has been deploying AI in over 100 parts of its company. All right. So AI will not just make semiconductor companies wealthier. It's every company in the world that is deploying AI. Now, how many of you have read this narrative that, oh, AI will take away people's jobs and people have no more jobs? If people have got no jobs, how do they spend money? If they don't spend money, the whole economy will collapse. Oh my God, we're going to die. How of you have been reading that narrative? Have you read that stupid narrative? Okay. Now, like I always say, don't trust what you read in the media, because the media always like to sensationalize bad news. There's always two sides to a story. Now, let me show you the facts of the other side, okay? Now, here are the facts. Do you know that population growth, okay, is growing much... Okay, sorry, let me repeat that. Do you know that the growth of the workforce in the world is much slower than the growth of the global population of the world? Okay, so take a look at this chart. From 2018 to 2028, okay, the world population is projected to grow 7.6 billion to 8.4 billion. That's a 700 million increase in the global population, okay? But the global workforce, that means people working, will only grow from 4.9 billion to 5.4 billion, which is 400,000 new workers. So the population is growing more than the workforce, okay? So in the world, there is a shortage of workers. There's a shortage. Can you see the shortage? By 0.9%. Now, this is in the entire world. If you look at high-income countries like the US, like Singapore, the change in population is 45 million, okay? The change in the workforce is minus 8 million. So there's a 4.9% shortage of workers in developed countries. Why? Why? Why is there almost a 5% shortage of skilled workers in developed countries because of the declining population. Singapore birth rate dropping, Japan birth rate dropping, US birth rate dropping, right? Not enough babies to become workers. And the people who are here are growing older and older. So did you know, look at this chart, there is a shortage of labor now, or rather there's going to be a projected shortage of labor from 2018 to 2054. It is the first shortfall since 1973. By the way, this research is by Fundstrat, so credit to Fundstrat for this research. So what does it mean? What does it mean that there's going to be a huge shortage of labor in the next 30 years? What does that mean for technology? What does that mean for AI? Does that mean, will there be a bigger demand or less demand for AI and robots? You tell me. More demand, that's right. So let me show you this next chart, also by OpenAI. Okay, now, when was the last time there was a labor shortage? First, 1948 to 1967, labor shortage. 1991 to 1999, labor shortage. And now, there is a labor shortage up to 2045. In the last two periods where there was a labor shortage, you can see that technology spending, companies spending on technology, and now AI, it increases significantly. Can you see that? So right now we are here. So with the labor shortage in the next 30 years, companies spending on technology and AI will be what? Will be exponential. This is where I'm investing. Okay? So far, is this useful information, everyone? Is this mind-blowing information? I mean, I read about this every day. I spend my time every day researching on this, and this to me is mind-blowing. Okay? Now, let's answer the next question. So now you say, okay, Adam, we are just at the beginning of the AI revolution, the AI build out. There's a lot more to go. But have stocks already run too far ahead? Does the stock market, is it already too expensive to buy in? So let's take a look again at the facts and ignore the media bullshit narrative, right? Now, some people would say that the stock market is expensive. Why? Because they look at certain metrics. They look at this thing called the price to earnings ratio. And if you look at the forward PE ratio of the S&P 500, it is now at 22.4 times. So is that high or low? Well, if you compare to the last 5 years, the average PE ratio, forward PE was 20 times, and the average in the last 10 years is 18.7 times. So purely from a PE ratio perspective, yes, the market is above the historical average, okay? But is it very high? I wouldn't say that. It is slightly above the average. Now, however, I've said many, many times, PE ratio by itself can be very meaningless, can be very, very, what's the word for it? Misleading. Why? Why is PE ratio very misleading? Because it doesn't take into account what? What doesn't it take into account? It doesn't take into account the growth of the earnings, right? So remember, PE ratio, it doesn't take into account the growth of the earnings. And are companies growing earnings faster today than 10, 20, 30 years ago? Yes. And like I said, companies' profit margins are triple today what they were 20 years ago. So you cannot compare today's PE ratio with the PE ratio 10, 20, 30 years ago. It doesn't make any sense. Okay? Now, remember this. If I have two companies, company A and company B, company A PE ratio is 5. Company B PE ratio is 30. Now, which is the more expensive company? Which stock is more expensive, A or B? Now, a lot of amateurs will say B, right? Wrong. Who says it's B? It depends on the earnings growth. What if I told you that company A, the earnings are growing at only 1% a year? But company B, the earnings are growing at 30% a year. Now, which company is cheaper? Now, company B is cheaper, right? Why? Because if you take the PE ratio, divide by the earnings growth, you get the PEG ratio, which is a more accurate way of measuring it. Okay, so 5 divided by 1 is 5. This one, 30 divided by 30 is 1. So company B, PEG ratio 1, cheaper than company A. That's why 3 years ago when I bought NVIDIA, NVIDIA's PE ratio was 60. People say, Adam, it's so expensive. Are you crazy? I say, no, it is not expensive because NVIDIA is growing their profits at 30, 40, 50%. And since I bought NVIDIA, it's up over 1,000% in the share price. Why? Because NVIDIA is not expensive if you take into account the growth of their earnings. Later, I'm going to show you. By the way, have you guys heard of Palantir? Now, is Palantir expensive? It used to be very expensive, right? But recently, based on their last earnings report, if you take the latest valuation, Palantir is no longer very expensive because the earnings have grown into the share price. Same thing with NVIDIA. NVIDIA's earnings have grown into the share price. So you cannot just look at the share price and say, oh, the share price went up 1,000% is expensive. Rubbish. If the share price goes up 1,000%, but the profit goes up 1,000%, then the stock is not more expensive. Okay? So we're going to look at all that in a short while. So hang on with me. Now, what's more important is to look at not P ratio, but what? But what? The PEG ratio of the S&P 500. And if you look at the PEG ratio today, when I talk very passionately, I get very hot. Then I start sweating. So I need to full blast my aircon now. Hold on, give me a sec. Okay. The PEG ratio of the S&P 500 now is only about 1.3. Is that expensive? No, use your brain. Okay, I'm talking to people who say, oh, the market is expensive. No, it's not. Look at the PEG ratio. It was at 2. It was at 2.4. It was at 1.7, 1.5, 1.5, 1.5, 1.5. Right now, we are here. If you take into account the earnings growth of the companies today, we are not as expensive as where we were in the past 20 years. Right? Okay. Let me show you this chart. Now, people who say that now the market is like the dot-com bubble in the year 1999, 1998, 2000, they are freaking idiots. They are freaking, I'm just being very polite today, okay? They're freaking idiots. Now, I'm old enough to remember the dot-com bubble because I invested during the dot-com bubble. And I can tell you that today's market is completely different because during the dot-com bubble, the stock price went up every day, okay? Every day. Companies don't make money. Companies have no revenue. The stock price also go up. Now, that was a bubble. Today, you got companies like NVIDIA, like Amazon, like Palantir. They show very good profits. The stock price drop. That's not a bubble. That's not a bubble, right? It's totally different. Now look at this chart. This was the dot-com bubble. Now, this line in brown is the share price. Okay, this is the share price. And this line in gray, that is the earnings of the company. Now you can see in the .com, the share price went up, but the profits were very low. And that caused what we call a bubble. And that's why it collapsed. Because eventually the share price will come back to the value of the company based on what it can earn. Understand? That's why I always say, as investors, you always have to calculate the intrinsic value based on the earnings and the cash flow of the company. If you look at today, the companies that are leading the AI revolution, yes, the share price has gone up a lot, as you can see, but the earnings have been supporting the share price. NVIDIA is reporting record earnings, Meta record earnings, Amazon record earnings, Apple record earnings. The earnings are there. This is not a bubble. If you think it's a bubble, you are very stupid. I don't mean to be rude, but you're really very stupid. Okay? Now, having said that, are there areas of the market that are in a bubble? Are there certain areas that are irrationally priced? Yes. Okay. And I showed this slide about 1 month ago. If you guys have been following me on YouTube, I showed this 1 month ago. I said, be careful of these stocks. Remember, I said these stocks are bubble. Why? Because many of these stocks, they don't have any profits. They don't have any profits. The share price going up is purely on hype, not on profits. Okay? So what? So are there some AI stocks that are bubble? Yes. Like CoreWeave, that's a freaking bubble. Okay? Like Nebius, that's a freaking bubble. Now, the good news is that this bubble has already started to burst since I talked about it 1 month ago. So since I talked about it, CoreWeave is down 60%. Nebius is already down 30%. Okay? Quantum computing stocks. This is also a bubble. This is also a hype, all right? This IonQ is down 40%. RGTI down 55%. Now, some people say, Adam, does it mean that now is a good buy? Is this now a good buy? Hello? Hello? What do you think? Down 40%, down 50%. Is it now a good buy? Well, in my opinion, I wouldn't dare to buy. Why? Because these companies don't make money. So even if it drops 90%, I still won't buy. I still won't buy because there's no commercially viable quantum computer yet. And they said one day we'll make this computer. This one day maybe 30 years from now. Okay? Next, cryptocurrency treasury stocks like MicroStrategy, or they call it Strategy, down 65%. Or BMNR that buys Ethereum, down 80%. Now, you guys know how I feel about cryptocurrency. To me, cryptocurrency is something you can speculate. You can trade it. You can make a lot of money in crypto using short-term price manipulation trading. That is what Alson will teach you later on, all right? But for investing, no. Because there's no profit, there's no cash flow, it is driven by the greater fools theory. So this can drop 90%, I still would not dare to buy it, okay? Nuclear energy stocks. Now, nuclear stocks, I think, have a lot of potential. They have a lot of potential. In fact, I like to invest in nuclear stocks, but I think they are still a bit expensive, right? So like Oklo down 45%, SML down 65%, okay? Uranium stocks. Now, LEU, Centrus Energy down 48%, Chemical down 25%. If you ask me, out of all these companies, I would say the only one that I think is still not bad is actually Comico. This one is still not bad. This one is still not bad. All right. Now, why? Why do I say not bad? Okay. Again, let me show you very quickly. If you look at Comico, let's look at some of the fundamentals, shall we? Okay, so let's look at Comico, right? CCJ. And like I said, this is not bad. Now, it doesn't mean that I'll invest in it. I still wouldn't dare to invest because to me, it's not safe enough, right? But at least if you look at Comico, you can see that, oh, it's still a bit expensive, sorry, right? The intrinsic value is $49. Now it's at 79. So it's still very expensive, right? Still very expensive. But at least it's making money. At least it's making money, okay? If you look at the financials here, okay, you can see that at least it is making money, right? It is profitable, and at least they have got positive cash flow, right? So this company at least is making money, but it's still very expensive. But if you look at the other company, which is the quantum computing, like IonQ, this one. First of all, there's no moat, and you can see that it doesn't make money, right? Look at that. Lose money, lose money, lose money, lose money, lose money, lose money, lose money. And the free cash flow is also negative. Okay. Now, always remember this, guys. When you buy a stock, what are you buying? When you buy a stock, what are you buying? You are buying a piece of a business, right? Okay. Now, what is a business? What is a business? A business is a money-making machine. The more money it makes, the more it is worth. Correct? The less money it makes, the less it is worth. Okay? If the business doesn't make any money, then what is it worth? If a business doesn't make any money, what is it worth? It is worth purely what people think it is worth, right? It's purely psychological, correct? And the trouble is that if something is priced based on psychology, based on perception, the trouble is once the perception changes, once people's sentiment changes, the share price can drop 90% or zero very fast. But if you buy companies that are actually making money, then you have no fear. Because even if the share price drops temporarily because of sentiment, you know that the company actually makes money, right? The price would eventually bounce back to the value of the cash flow. Okay? So that is something very, very important. So let's take a look at the components of the S&P 500. So when people say that, oh, the stock market is expensive, it's like saying all Americans are rich. It's like saying all Singaporeans are rich. Is that true? It's not true. Yes, there are some Americans, there are some Singaporeans, there are some Malaysians, there are some Australians that are very rich, right? But not all of them are rich. There are some that are not rich. Okay, so same thing. You have to look at the individual companies in the S&P 500 and to see which are expensive and which are cheap. Okay, so this was just published yesterday, so this is brand new. And you can see that out of the 500 companies in the S&P, you have got altogether, let me just add this together, 18.8 plus 16.6. So roughly about 35% of the stocks in the market are expensive. They are selling more than 20%, sorry, selling more than 10% above their intrinsic value. Now, 27% of stocks are fairly priced, which is plus minus 10% of their intrinsic value. And you can see that about 37% of stocks are undervalued. Okay, so what am I saying? What I'm saying is that in the market today, even though the market is just 5% below the all-time high, but there are many companies that are actually undervalued. that make very attractive investments. Okay, someone is asking me, they say, Adam, wasn't Palantir loss-making back in 2021? Correct. That's why I didn't buy Palantir when it was losing money. I only started buying Palantir in late 2022 when it turned free cash flow positive. When it had the first 2 quarters of positive free cash flow, then I bought Palantir. Before that, I didn't buy it. Okay? Now, specifically, which are the stocks? Well, let me give you an overview over here. Let's take a look at this. So what are the stocks that are very expensive now in the market? Apple, overvalued. Exxon, overvalued. IBM, overvalued. Robinhood, overvalued. Goldman Sachs, overvalued. CrowdStrike, overvalued. Costco, overvalued. Oops, sorry. Right? And you can see for yourself the rest of them, right? Then stocks that are overvalued, slightly overvalued, you have got Autodesk, you've got Bank of America, you've got DoorDash, right? You've got Google. Google was cheap for a long time when I was buying, and now it's really overpriced, right? Palantir is slightly overvalued. And you can see the rest of them, right? Moody, slightly overvalued. Monster, okay? Now, fairly valued, you can see over here. Undervalued, very undervalued here. Now, so again, does it mean that as a good investor, I will just buy the companies that are undervalued or very undervalued? Would I buy all these things? Yes or no? Would I buy all these things? Yes or no? No. Why? Because cheap crap is still crap. Cheap crap, write this down, everyone. Cheap crap is still crap. One of the most common mistake investors make is they buy stocks simply because they are cheap. Never buy a stock just because it is cheap. The most important thing is what? What's the most important thing in investing in a company? Is the quality of the company. That is the priority. So only buy the highest quality companies that are cheap. Okay? So how do you know which are the highest quality companies? In the next part of this webinar, I will show you again my investment criteria, what I look for in a great company. That's coming up in a short while. But let me show you this very important piece of research. Ready? Listen to this. Since 1926 to now, 100% of all the wealth created in the stock market has only come from 3.44% of all the companies that are listed. Okay? In other words, about 97% of all the stocks listed in the market contributed little or no long-term wealth creation or even destroyed shareholder wealth in the long term. So what it's saying is that this, guys, in the long run, 97% of stocks will not make money. 97% of stocks will not make money in the long term. Only 3% of stocks will make money for you in the long term, okay? And even more mind-blowing, the top 1.8% of companies account for 90% of all the profits. And the top 0.26% generated half of all the wealth. So what does it tell you? It tells you that if you want to make money in the stock market, do you just buy any stock that you see on social media? Do you just buy any stock that is recommended to you? Do you just buy any stock that is going up in the short term? No. If you do that, you're going to lose all your money eventually. Yes, the share price can go up in the short term. In the short term, it can go up, yes, but long term, it's going to go back all the way down. Okay? So when I invest in a company, I want to make sure that not just the short term, but I want to make sure that 3, 5, 10, 20 years from now, the price will keep going up. Is that clear, everyone? So if I want to make sure that the stocks I buy will keep going up in the next 5, 10, 20, 30 years, I should only invest in the top what? In the top what? In the top 1% or less. The top 1% of the highest quality companies. Which are these companies? Later, I'm gonna show you. Okay, so hang on there. Are you guys still with me? Okay. Now, for those of you who say, Adam, I have got no idea how to pick stocks. I don't want to learn how to pick stocks. I'm too lazy. Can I still make money? Yes. So for those of you who are too lazy to take my courses, who are too lazy to follow what I'm buying, you can still be rich. How? Simply by buying the S&P 500 index ETF. That's it. Simple. This is the no-brainer way of investing in US stocks. So you buy an ETF that tracks the S&P 500, which are the biggest 500 companies in the US. Now, question, out of the 500 biggest companies, are they all great companies? Are they all great companies? No. So out of the 500 companies, you have got great companies, you've got good companies, you've got okay companies, and you've got crap, all mixed together in the 500. So the good news is that if you own all of them, the profit from the great company will make up for the losses of the crap companies. So that overall, it will still grow, okay? So what kind of returns should we expect from the S&P 500? What kind of returns should we expect? Well, if you look at the last 20 years, the S&P 500 gained 670%. That's an annualized growth of 10.75% a year. And this is despite all the ups and downs. So this is including the great financial crisis in 08-09. And we had a crash in 2018, the first trade war, another crash in 2020, which was the COVID pandemic. Then 2022, another crash. So if you just stay invested through the ups and downs, your money is growing at close to 11% a year without using any brain, without picking any stock. And if you invest in the S&P 500, you will outperform 90% of professional fund managers. Okay? So that's the simplest way to invest. Now, in the last 10 years, the S&P 500 has gained 221%. Again, despite the crash, it's part of the game. It's like a roller coaster, but you stay invested through the ups and downs. You're getting 13% growth a year with dividends reinvested, and you outperform 90% of all professional fund managers. Because if you have watched my other webinars, I've shown you that less than 10% of professional fund managers can beat the index in the long term. Have you guys heard me say that many times before? Have you guys heard me say that many times before? Okay. So if you simply dollar cost average, that means every year you just put in a bit of money into the S&P 500, would you have a pretty good retirement account? Would you get a pretty good retirement account? Yeah, so you can see over here, if you earn 6,000 a month, assuming that's the average income of most developed countries, and you just save 10% of your monthly income, you invest into the S&P 500, you can see that in 25 years, you'll have 1 million. In 30 years, you have close to 2 million. without using any brain, without picking a single stock. Okay, and anyone can do this. Any moron can do this. Okay, now some of you may say, but Adam, I don't want to wait 25 years to hit 1 million. I don't want to wait 30 years to hit 1.9 million. I want to hit this target faster in 10 years or even less than 10 years. So is it possible? Is it possible to achieve this even faster in the next 10 years or less? Yes. How? How can we accelerate our wealth building? How do you accelerate this? By getting more than what? By getting more than 13% a year. By getting more than 10 to 13% a year, right? So if you can beat the market, then you can accelerate your wealth. So that is where I will teach you, or that's where I've been teaching people now for 20 years through my investment courses, how to beat the market. Okay. So how do you beat the market? How do you beat the market and achieve between 20 to 40% annual returns without having to stress and worry? Is the market going down tomorrow? Is it going up tomorrow? No, no stress. Okay. By picking the top 1% of great businesses in the market and buying them only at significant discounts. And the good news is now there are a lot of great companies selling at significant discounts. There are a lot now. You just have to know where to find them. And I'll show you a process in a while. Okay. Why is it important to pick the top 1% again? Let's take a look. This is the last 5 years. Now, in the last 5 years, if you bought the S&P 500, you would have gotten 93.9% without using any brains. Okay, again, any moron can do that. Okay, but if you bought the highest quality companies like Nvidia, up 1,200% in the last 5 years. Palantir up 758% in the last 5 years. Palo Alto up 280%. Alphabet up 235%. Booking up 133%. Meta up 119%. So when you buy the highest quality stocks, you will outperform the index anywhere from 1.5 times to 2 times to 8 times to even 13 times. Right? Now, by the way, all these stocks I'm showing you are the stocks, as you guys know, are in my portfolio. Okay, so in full transparency, let me show you my portfolio. Now, I've got 3 portfolios. The first 2 are my capital gains portfolio, where my focus is on investing in companies that give growth. My third portfolio is my dividend portfolio, where I focus mainly on Singapore stocks for dividends. Now, my dividend portfolio, I'll talk about it during my webinar next week under dividend investing. But today, I'm going to talk about my growth portfolio. Okay. So my growth portfolio, I've got 2 accounts, which are actually both similar, right? So these are my 2 accounts. And my first account, right? You can see these are the stocks I've owned, right? Palo Alto, Broadcom, Mercado Libre, Booking, Nvidia, Microsoft, Alphabet, Meta, Amazon, United Health, ServiceNow. And right now, it has grown to 5.66 million US dollars. And my second account, this one, again, is similar stocks. Okay, Amazon, Nvidia, Alphabet, Meta, right? Palantir, United Health, Broadcom, Mercado Libre, Palo Alto, ServiceNow, Booking. This one has now grown to 5.87 million. So if you add it together, 5.66 plus 5.87, that's about 11.53 million US dollars, right? So if you convert to Singapore dollars, because I'm in Singapore, if you convert to Singapore dollars, that's 15.1 million Singapore dollars. Okay. Then my third portfolio, which is my dividend portfolio, which I'll show you in detail next week here, right? So I've got DBS Bank. Like I said, it's grown to over $1 million, my DBS position. I've got OCBC, UOB, CapitaLand Integrated Commercial Trust. I got Parkway Life REIT. So this is now yeah, 5.8 million. So 5.8 plus 15.1 is total 20.9 million. Okay. Now, like I said, last month it was actually 23 million. All right. It actually hit about 23.6 million. And then the last few weeks, the market's been coming down. So from 23.6 million, it's now 20.9 million. All right. So, like I said, your portfolio cannot go up every day, every week, every month. It doesn't go up in a straight line, right? You will go through ups, down, up, down, up, down, up, down. But over time, it will keep growing, right? So the fact that it's now dropped to 20.9 million, am I concerned? No, because I know by the end of the year, it'll be back to maybe 24, next year 28, it just keep growing. Now, the reason I'm showing this to you is not to impress you, it's not to show off to you, but to impress upon you that all the strategies that I teach, all the methods I'm showing you are the same methods that I use to manage my own portfolio, which is over 20 million, right? And I know to some of you it's no big deal. I've got students who have got 50, $100 million. They say, Adam, your 20 million is like nothing. I say, okay, that's fine, right? So it doesn't matter, right? But wherever you are, okay, you can grow your portfolio very consistently. Now, performance, let me, again, in full disclosure, let me share with you my performance this year and the last few years, because I don't think anyone else does this. So let me do that. Let me log into my account. Okay, so you can see that year to date, my portfolio is up 13%, right? It was up about 22% in October. Then last few days, the market came down, which is fine because it goes up and down, right? Later December, you go up again. No guarantees, but I think there's a good chance that from now to December, we should have a good bounce up. So it should get back up to, hopefully 15, 17, 18% by the end of the year. And versus the S&P 500, S&P is up 11% so far this year. So I'm above the S&P by 2%. And for the last 12 months, it's up 12.32%. Okay. But again, the year is not over yet. So let's see what happens by the end of the year. Hopefully, I can get close to 18% by the end of the year or 20%. Now, last year, you can see my first portfolio I showed you gained 24.8%. My second portfolio gained 22.4%. In terms of dollar gains, total was 1.7 million US in combined gains last year. Then 2023, my first portfolio gained 48%. My second portfolio gained 43%. In terms of dollar gains combined was over 2 million US dollars. So the point I'm showing you is this. Can you get 40% every year? Can you get 40% every year? No, it's not realistic. Okay. So I can tell you that there are certain years I get 40%, certain years I get 50%, certain years I get 20%, certain years I get 15%. All right. But on average, if you look at my long-term performance for the last 6 years, despite 2 market crashes, my portfolio grew 277% versus the S&P 500 that grew 171%, and that is an annualized compounded return of 21.74%. So this is my portfolio versus the S&P 500. I have outperformed the market consistently in the short term and the long term. And over the last 10 years, my portfolio is up 733% versus the S&P 500 up 280. Sorry, this is since, sorry, 10 years this year. My portfolio up 541% in the last 10 years versus the S&P up 193%, which I think is not bad lah. Not bad lah, huh? Not bad lah, huh? Now, is this luck or not? Do you think I'm just lucky for 10 years? Okay. By the way, the last 6 years, was it an easy market? The last 6 years, was it an easy market? It was one of the most challenging markets in the last 6 years. Most professional fund managers lost money in the last 6 years. Why? Because we had the COVID crash, we had the high inflation and high interest rate, we had the Ukraine war, we had the Middle East war, we had crazy Trump tariffs, we had all kinds of disasters, right? But I could still grow my portfolio 277% despite two bear markets and despite two wars and despite the economic uncertainty over the tariffs. What's my point? My point is this. I teach my students, as an investor, if you invest only in great companies, you have no fear of recession. You have no fear of market crash. You have got no fear of war. Why? Because if you own good companies, despite the market crash, despite the bear market, despite the war, your portfolio will keep growing higher and higher. Okay? So how many of you would like to invest in this way, where you have no fear of recession, no fear of market crash, that you invest in a stress-free way, in a worry-free way? Okay? Want to learn? Want to learn how to do this? Okay. So let's learn. Now, some of you would have learned this already. Great. Good review for you. If you have not learned this, it's your first time, please grab your pen and paper and write this down. This is the most important part of my lesson, which is the how I do it. Okay? So there are altogether 4 keys. There are altogether 4 keys to successful investing. And I like to use this acronym, WWHW. So what does the first W stand for? The first W is this. To be a successful investor, you must know exactly what to buy. You must know exactly what to buy. In the US market, there are over close to 5,000 companies you can buy. Oh, in the world, there's tens of thousands right now. Do you want to buy all the stocks? Do you want to buy all the stocks? No. Again, what did the research show you? 90% of all the, sorry, not 90%, 100% of all the profits came from what? 100% of all the profits in the long term came from how many percent? Came from only 3% of the stocks. Remember that? And 90% of all the profits come from less than 2% of the companies. So we only want to buy great businesses, the best of the best. We are not interested in buying average businesses. We're not interested in buying lousy businesses. We only want to buy great businesses. Now, you may ask, how do I know it's a great business? Okay, so later I'm going to show you, I've got a 7-step investment criteria for identifying great businesses. So for me, before I buy a stock of a business, it must pass my criteria. So I'm going to show you a lot of examples in a while. Okay. Now, so that's the first key. Number 2, once you know what to buy, you must know exactly when to buy. Why? Because listen carefully, a great business can be a lousy investment if you pay too high a price for the shares, if you buy it at the wrong time. But a great business can be a great investment if you can buy it for less than what it is worth. Okay, I repeat, a great business is a great investment if you can buy it for less than what it is worth. So in other words, we only want to buy great businesses when they are undervalued. When the share price is selling below the intrinsic value of the business. Now you may ask, how do I know what's the intrinsic value? How do I know what it's worth? Okay, coming, right? I'll come to that in a while. Now, this is no different from real estate. Let me ask you this question. Let's imagine that you want to buy an apartment and you found a beautiful apartment, great view, great location, beautiful furnishings, right? What do? You get a bank valuation. Now, the bank values the apartment at, say, $2 million. But the seller is asking for 2.5 million. And you got so excited by it because there's only one left. And you say, okay, I pay 2.5 million. Now, is that a good investment? No. Right? Because you paid $500,000 overvaluation and it'll take you longer to eventually break even if you sell it. It's like people who bought Sentosa Cove in Singapore. After 20 years, they still lose money. Have you read about that? Because they overpay ridiculous price. Ridiculous price, right? But if, let's say the seller of the apartment was desperate. Let's say he's going through a divorce. His business went bankrupt and he has to quickly sell the apartment. And at that time, no one was there to buy. You're the only one there. And you said, okay, I tell you what, I buy your apartment for 1.5 million. And he says, he's desperate. He sells it to you. Now, is that a good deal? Yes, you bought it $500,000 below valuation, right? Okay. Question, is it easy to find those deals in the real estate market? Is it easy to find a desperate seller? No, it is very difficult. Very difficult, right? But you know what's the good news? The good news is that it is very easy in the stock market. Because in the stock market, there are times every year when investors panic because of all kinds of reasons, right? And when they panic, they are willing to throw their stock at 20, 30, 40, 50% discount. And if you know which are the great companies, the great apartments with the great view and the great location, and you can buy 20, 30% below valuation, you make a lot of money. Is that clear, everyone? Is that clear? So how have I made millions in the market? I make millions in the market by buying great companies when sellers are desperate. When people are panicking, they're desperate. We're gonna die! We're gonna die! And they sell their good company at 20, 30, 40% discount because they thought it's the end of the world. That's how I managed to buy Meta that time at 70% discount. I bought Google at 40% discount last year. I know many of you did at the same time, right? Because people thought, oh, ChatGPT is going to kill Google. Google's going to be broken up, or Google's going to die. Freaking idiots, right? If you analyze the business, you know that they're making more sales and profits every year. Their moat is getting stronger. So ignore the analysts, ignore the news, trust the numbers, trust the research, and take advantage of people's short-term panic and short-term mentality. Is that clear? Okay, so a lot on psychology that you're going to learn in the course. All right, next. The third key, once you know what to buy, you know when to buy. Number 3, you must know how many shares to buy. Very important. Okay, listen very carefully. No matter how great you think a stock is, do you put all your money in one stock? Do you ever put all your money in one business? No. Why? Because no matter how great a business is, shit can happen. Shit can happen that you can't always foresee. So always divide your capital into minimum what? Always divide your capital into minimum at least 8 to 10 great companies, right? At least 8 to 10 great companies, so that if one or two of them shit happens and the share price drops in the short term, it doesn't matter, right? Because the rest of the companies will go up and bring up your portfolio, right? So as you guys know, I bought Alibaba back in 2016. Or was it 2017? Yeah, I've been holding Alibaba now for like 9 years, right? So I bought Alibaba and I had no way to predict that Jack Ma would piss off Xi Jinping, right? And they cracked down on the tech companies and my Alibaba dropped 60% in 2021. Could I predict it? There's no way I could predict it, right? But did it matter? It didn't matter because in 2021, my portfolio still grew close to 30% because my Alibaba went down, but my other companies went up, right? And by the way, today, I'm still holding my Alibaba. I've not sold it yet, right? Because there's nothing wrong. It's still growing. It's still okay, right? Okay. So this is called portfolio allocation and diversification, where we'll go into in detail in the Whale Investor course. And you will see exactly how I do it every day in the Ultimate Investors Playbook subscription. Okay. Finally, you must know when to sell. A lot of people, you know what's their problem? They say, Adam, I know what to buy. I know when to buy. I don't know when to sell. I don't know when to sell. You gotta know when to sell. Some people, you know what's their problem? They sell too early. Okay? They buy a stock, it goes up 20%, 30%, 50%. They take profit. And then the stock goes up 1,000%. They're not there. It's like when I bought Nvidia at $15 in late 2022. Many people also bought Nvidia. I bought Palantir at $9. Many people also did that. I shared it in my YouTube videos, right? But when Nvidia from $15, it went to $30, people said, oh, it already doubled. It already went so high, it can't go higher. They sold all at $30, right? Now Nvidia went up to 200. Now it dropped to 180, but it's still up more than 10 times. Have I sold any Nvidia? No, because Nvidia is the most important company in the AI revolution. Because to build robots, to build robo-taxis, agentic AI, everything needs Nvidia. There's only one Nvidia. AMD is very far behind. Intel is very far behind. And that's why, even though my Nvidia grew 1,000%, I ain't selling shit. I ain't selling a single share because I'm holding for the next 10, 20 years. There's a long runway. Same thing with Palantir. Now, I've sold quite a lot of Palantir because at the time when I sold it, it was way overpriced. But recently, Palantir's profits have caught up, so it is not that crazy expensive anymore. It's still not cheap. Palantir's still not cheap, but at least not super crazy expensive. So I'm not selling any more Palantir. In fact, I'm hoping it can drop a bit more. If Palantir can drop below 140, 130, I'm going to buy more Palantir, right? Because again, Palantir is the only pure play AI enterprise software company in the world. And there's no close competition, all right? So don't sell too early. If not, you will make peanuts. We call it kacang putih money in Asia. You will not make millions. You cannot sell too early. But at the same time, once it's way overpriced, once the company has a risk of being disrupted, you got to get out. Okay. Like Adobe. I used to own Adobe and I sold all my Adobe at a small profit. Okay. Because I think Adobe, if you watch the latest Nano Banana Pro from Google, you look at that, you will be very scared of owning Adobe. Because why would you need Adobe anymore when the latest AI Nano Banana can create everything you want in seconds? Okay, so the moment I feel that there's a chance that the company's business model, the mode could be disrupted, I'm out. Same thing with Duolingo, right? I bought Duolingo for a short profit. I made double my risk and I got out, right? So you have to know when to get out. Okay, so far, is it useful, everyone? Does this make sense? Okay, so let me go into greater detail, okay, on what to buy. So again, I only buy great businesses that pass my criteria. I've got 7 criterias for a great business. And less than 1% of companies pass my criteria. less than 1%. So we only want to invest in the top 1%. So what are my criteria? Let me run through for those of you who are new to this. Write this down. Number one, I only invest in businesses that have a track record, have a history of consistently increasing sales revenue, net income, and cash flow from operations. Okay? For at least 5 to 10 years. Please write this down. At least 5 to 10 years. So in other words, I want to make sure that the last 5 to 10 years, the business revenue is growing year after year, after year, after year. The profits are growing consistently, and the cash flow from operations is growing consistently. Why? Why is that important? Because if a business can grow their revenue, profits, and cash flow for at least 5 to 10 years, that means the business is predictable. Please write this down, everyone. Write this down. We want the business to be predictable. Number two, it must be consistent. It must be consistent. Number three, it must be resilient, which means that even in a recession, even in a pandemic, the business must be able to still grow their revenue and their profits. Now, can all businesses do this? Can all businesses pass the first criteria? No. In fact, I can tell you that less than 5% of businesses can pass my first criteria. So if you just apply my first criteria, it would eliminate 95% of all the companies. So let's look at a few examples, shall we? Now, I'm from Singapore. So people always like to ask me, what do you think about Singapore Airlines, SIA? Now, let me just say that I love Singapore Airlines as a customer. In fact, when I fly, I only fly on SIA, only SIA, because best customer service, best safety record. But will I ever buy shares of Singapore Airlines? Will I ever buy shares of SIA? No, never. Why? Because all airline businesses are not great businesses. It's not the fault of the management. It's the nature of the whole industry. Okay? Because they all fail the first criteria. They can't pass the first criteria. No airline can pass the first criteria. So let's take a look, shall we? Okay. So let's look at Singapore Airlines here. Now, by the way, this Singapore Airlines I'm looking at, oops, I just got logged out. Hold on. Let's log back in. Okay. So right now, as you know, Stock Oracle only shows US listed stocks. Okay. Next year, we'll be rolling out Singapore, Hong Kong, and China stocks on Stock Oracle next year, but now only US listed. So I'm going to show you Singapore Airlines, the one listed in the US market. So this is in US dollars. Okay. It's the Singapore Airlines shares listed in the US market. So if you take a look at Singapore Airlines, let's look at the financials. First thing you always do, look at the 5 to 10 year track record. Okay. So we can look at bar chart if you want. Okay, let's look at the bar chart. Now, you can see the revenue. Okay. Is the revenue growing consistently? Does it grow consistently in the long run? Well, it's not too bad. It's not too bad because you can see that, yeah, it's a bit cyclical. Now, of course, this was the COVID pandemic, but it's going up. So overall revenue does go up. So revenue is not bad. It's not bad. Okay. It does generally go up in the long term. But the problem is what? The problem is the what? Is the what? What's the problem? What's the problem? The problem is the net income is not consistent. Okay. So if you look at the net income, which is in green, what do you notice? You see the sales are so high, the profit is so low. Can you see the profit so low? And then here the profit dropped by half. Then the profit went up. Then the profit dropped by half. Then here lose money. Here lose a lot of money. Then here lose money. Then here make money. make more money, make the same money, and then here drop again. Can you see? So it is not consistent. So make more money, make less money, make more money, make less money. It is not consistent. Do you follow what I'm saying? The profit doesn't grow consistently. It is up and down, up and down. It is very, very inconsistent. And look at the free cash flow. Look at the free cash flow in green. Look at it. Negative, 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 negative. Very positive. Drop by half. Drop again. Drop again. Look at it. The free cash flow is going down. Okay? Now, what does it mean? That means, now, what's the problem with the airline business? Why is the airline business having negative free cash flow? A lot. Why is the cash flow not positive? Why is the profit so inconsistent? Why? What's the problem with the airline industry? Number one, is very competitive. There's too much competition and there's very high costs. There's high labor costs, high maintenance costs, high fuel costs, right? Now remember, what is a business? A business is a money-making machine. So if the business cannot make more money over time, it cannot be worth more over time. That's why the share price cannot go up over time. So if you look at the share price of Singapore Airlines, let's put it in the share price here. This is the US listed one. What do you notice in the long term? This is the last 10 years. What happened? If you hold Singapore Airlines for the long term, what happened? Right? You can see 10 years ago, it was selling at $8. This is in US dollars. In US dollars. You can convert to Sing, right? After 10 years of holding, is now at $4.90. Hold for 10 years and it's still down. Look at that. It's not the fault of the management. It's not their fault. It is all airlines are like that. It's all the same. Okay? So I avoid these kind of companies because it's very hard to make money. You understand? Now, on the other hand, what companies do I like? I like companies that have very low physical capital expenditure, right? That are very scalable. So example, let's look at MasterCard. Now let's look at the difference of MasterCard. Let's look at financials here. Can you see this chart, everyone? Look at the revenue. Is the revenue growing consistently? Yes or no? Even in the pandemic, even in the greatest pandemic, their revenue only dropped a little bit. We call this resilient, recession-proof, pandemic-proof. That is what I want. And look at the net profit. Is the net profit very consistent? Is it growing consistently? Yes or no? Yes. So if the profit is growing consistently, you can easily project it to the future. If it's inconsistent, you can't do any reliable projections. And the profit margin is very high. The profit margin is like 30% profit margin. Whereas Singapore Airlines, the profit margin is only, I don't know, 5% or profit margin, right? And look at the free cash flow. The most important thing is the free cash flow. Look at the free cash flow. Is it growing consistently? Is it generating more and more cash every year? Yes, this is the kind of business that I find very, very, very predictable, very consistent, very resilient. So if you look at MasterCard, does the share price look like that? Does the share price look like that? No. If you put in MasterCard, what does the share price look like over the long term? All right. You can see the share price over the long run is on a very clear what? It's on a very clear uptrend. Okay, it's on a very clear uptrend. Now, again, does it go up in a straight line? Does the price go up every day, every week, every month, every year? No, it moves in wave patterns, right? Wave up, wave down, 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 wave up, wave down. It moves in these wave patterns. So it's like breathing pattern. Breathe out, breathe in, breathe out, breathe in, breathe out, breathe in. Now, no matter how strong you are, can you breathe out forever? No. You cannot breathe out forever. You run out of air, right? Eventually, you have to breathe in before you can breathe out again. Same thing with the stock market. It can't go up in a straight line. It goes through wave up, wave down, wave up, wave down, wave up, wave down. Now, as an intelligent investor, when do you want to buy? Do you want to buy after wave up or do you want to buy after wave down? Yes, you want to buy after wave down. So always wait for wave down, then you buy before the next wave up. Understand? Now, do we know exactly where's the bottom of the wave down? Can we predict the exact bottom? We can't always predict the exact bottom, right? But we don't need to buy at the bottom to make money. We don't need to buy at the bottom to make money. We just need to buy near the bottom, near the bottom. Okay, so let's say you buy here, and after you buy, it drops some more. Should you be very upset? After I bought it, drops some more. No, because you can't predict exactly where's the bottom. So that's why I teach my students, never buy at one go. If you want to buy 100 shares of a stock, buy over what? Buy over what? At least 4 to 5 tranches. So when it drops and is undervalued, buy 1 quarter first. If it drops a bit more, buy another 1 quarter, right? Then let's say it rebounds, buy another 1 quarter. So you buy 1 quarter, 1 quarter, 1 quarter, 1 quarter, or 1/5, 1/5. You buy in 4 to 5 tranches. So your average price will be somewhere here. Is that clear? So if you buy somewhere here, over time, you buy somewhere here, you buy somewhere here, you buy somewhere here, you buy somewhere here. Over time, will you grow your portfolio? Yes or no? Yes? Oh, you love my crying. Great. I'll do more crying later. Okay. Sorry, where was I? MasterCard. Okay. Is this useful, everyone? So that is criteria number 1. Remember, I've got 7 criteria. I'm very strict. The stock must pass my 7 criteria before I'll buy it. Okay. Now, criteria number 2. Criteria number 2 is the most important criteria of all. This is the most important. So please write this down. Please listen carefully. I will only invest in a business that has a what? That has a sustainable competitive advantage that can protect it from competition, so that competitors cannot easily take away their customers. Competitors cannot easily take away their market share. So Warren Buffett, what does he call it? Warren Buffett calls it an economic moat. Now, what's a moat? In the old days, kings lived in castles. And how do they protect the castle from the invaders? They build a white moat around the castle. The moat is like this water barrier where they put crocodiles and whatever, right? So same thing in a business. When you buy a business, you have to make sure it's got a white moat with a lot of crocodiles. Okay? So the competitors cannot take away, the customer cannot take away your market share. So in other words, write this down, write this down, write this down. I only want to invest in businesses that have little or no competition. Have you written it down? I repeat, I only want to invest in businesses that have little or no competition. The competitors cannot easily disrupt their business. That is called a moat. Okay? So what gives a company a moat? What gives a company a strong moat? Number one is a very strong what? Brand. Okay? So there's a brand that people love, people are loyal to, and they got pricing power. That means even if the company raise price every year, people will still buy. Even if the price is higher than the competitors, people will still buy because of the loyalty to the brand. That gives a company a moat. Now, can you name me some companies where they can raise price every year and people still say, take my money, take my money. I still buy, even though it's more expensive than the competition. Apple, that's right. Apple sold out iPhone 17, right? Apple has one of the strongest brands in the world. Hermes, that's right. Hermes, Ferrari, correct. These are what we call strong brands that have got pricing power. I also like to buy companies that have a brand monopoly. Yeah, someone said Netflix, correct, Netflix, right? Now, LVMH, that's right. Now, what's a brand monopoly? It's one where the moment you mention a product or service, is the top of mind recall. It's the first thing that people think about. Okay, so let's play a game. Let's play a game. I'm going to mention a company. Sorry, I'm going to mention a product. And you tell me the first brand that you think of, right? So if I mention search, every day we have to search for information. When I mention search, what do you think about? Google. In fact, what do we say? We say Google this, Google that. It's become part of our vocabulary, right? Google has over 90% market share. And they own YouTube. They own Android. They own Chrome, right? Which are all leaders, okay? So, and they own Waymo, which is the leader in robotaxi right now. So if you look at Google, again, if you look at it over the long run, okay, what do you notice? In the long run, it always goes up. Oops, sorry. Yeah. Let me show you. Okay, yeah. So in the long run, it always goes up because Google has no close competition. They have got no close competition. The competitors can't even smell their fat. Okay? What else? If I mention office software, when you think about office software, whether you work from home, you work in the office, that's right, Microsoft. So Microsoft, again, is a brand monopoly. There's no close competition. Long term, it always goes up. Okay? Now, wherever you are in the world, you're in Singapore, you're in Malaysia, you're in Europe, you're in the UK, you're in the US, early in the morning, late at night, you're hungry. But, restaurants are closed, but there's a fast food joint somewhere close by. What do you think about? McDonald's, that's right. So McDonald's is a brand monopoly in fast food. And that's why long term, you can see McDonald's always goes up. It always goes up. So make your life easy. Okay, I make my life easy. What do? I only like to buy what? I only like to buy brand monopolies. Okay, I only like to buy brand monopolies. So first thing that gives a company a moat is a strong brand, especially a brand monopoly. Next, you guys still with me? Okay. Next, I like to buy companies that have high customer switching cost. What does it mean? That means once the customer uses the product, it becomes very expensive, very inconvenient to have to switch to another brand because they are stuck there, all right? And they have to keep subscribing year after year after year after year. What companies lock in their customers for life? Very hard to switch. Software companies, right? Like Salesforce, like ServiceNow, like Constellation Software. That's right, cybersecurity companies like Palo Alto, like CrowdStrike, like Fortinet, consumer businesses like Apple, all these, they lock in the customer, right? That's why I own all these companies. I like companies that lock in the customer. Very, very good, right? Next, network effect. For example, in Asia, can you live without WhatsApp? In Asia, can you live without, you cannot live without WhatsApp, because to collaborate with family, with friends, with businesses, you have to be on WhatsApp. That's called a network effect. Okay. If you want to advertise online, you have no choice. You either advertise on Facebook, Instagram, YouTube, or Google, right? It's a network effect. You want to sell something online, you have to be on Amazon. You have to be on Alibaba. In China, you have to be on WeChat. You cannot live without WeChat, right? So these are what called network effect. You have to be in the network. You cannot get out of the network, right? Next, barriers to entry. So some companies have certain special intellectual property, IP, that their competitors are nowhere close to having the IP. So it creates a barrier to entry, right? Example, Palantir has a huge IP barrier to entry. What's the other one? ASML. ASML has a 90% market share on the equipment, the photo, what do you call it? The photo, suddenly I forgot. The equipment to make semiconductors, right? They need ASML machines to imprint the designs on the chip, right? And ASML is the only one with the IP to do it. No other company is close to ASML. Photolithography. Thank you guys. I'm getting a bit old, right? Huge economies of scale. How have you realized that in today's world, the strong get stronger? Strong companies get stronger. And it's a winner take all. Okay? It's the winner take all. That's why there's no way that Snapchat can compete with Facebook or Instagram, because they spend hundreds of billions on AI infrastructure. They create that economies of scale that no one can replicate. Understand? Number three is high growth potential. Okay. So let me ask you this question. Would you invest in childcare centers in Singapore? Like there's this company called Mind Champs that does childcare centers, right? Would you invest in childcare centers in Singapore, in Japan, in US, in China? Yes or no? Of course not. Why? Why not? Because it's a declining industry, right? Because the birth rate is falling every year. There's less and less babies being born. So no matter how hard you want to grow the business cannot grow because there's less and less customers every year. You're going against the current, understand? But would you invest in old age homes? Would you invest in medical facilities in Singapore, US, China, Japan? Yes, because it's a what? Growth industry because of the aging population, correct? So if you look at all the companies I invest in companies within high growth industries like healthcare, like cybersecurity, like AI infrastructure. Okay? These are the secular growth. Many years ago, I used to own a company called Boston Beer, and I sold it. And there's another company called Constellation Brands that owns a lot of alcohol stocks that Buffett still owns it. I don't know why he still holds it. But is it a good idea to own alcohol companies today? It's a bad idea. Why? Because globally, people are drinking less alcohol, right? The new generation, they drink less alcohol than the previous generation. So it's a declining industry. You understand? But if you invest in companies that focus on healthy drinks like Celsius, is that a growth industry? Yes or no? That's a growth industry. Understand? Yeah. Okay, next, very important. Make sure that the companies you buy Okay, they have got conservative debt. Okay, I like to buy companies with very little debt and a lot of cash. Why? If you look at companies in the past that went bust, like Lehman Brothers, like Silicon Valley Bank, like Hyflux, like Nobel Group, what did they all have in common? What did they all have in common? They all had unsustainable debt. So when a company has got very high debt, the moment there's a recession, the moment there's a financial crisis, they have the risk of going bust. They drop, they never come back. But if you buy companies with no debt or little debt, in the worst recession, they will be fine. In fact, they are able to buy up a lot of the competition. Understand? Like recently, a lot of people ask me about Oracle. Hey, Adam, Oracle stock, should I invest in Oracle stock? Now, I don't know about you, but I wouldn't dare to touch Oracle stock. Why? Why wouldn't I dare to touch Oracle stock? Let me show you why it's very scary for me to invest in Oracle. Why? What do you think is the problem with Oracle stock? The debt is very, very dangerous. Look at that. The financial strength is very low. They've got very low financial strength. Look at that. Now, to be specific, let me show you the data here. Their debt servicing ratio, okay, this one is still not so bad. Their debt to EBITDA ratio is 3.85. Sorry, this is the average. This is the latest one. The latest one is 3.94. This is dangerous. This is very dangerous, okay? The debt to EBITDA ratio cannot be more than 3. It cannot be more than 3. If it goes more than 3, it's getting very dangerous. Understand? Now, you guys remember Hyflux? Do you know what was Hyflux debt to EBITDA ratio? It was freaking 12. Nobel Group debt to EBITDA was freaking 15. It was insane. That's why that time I told my students, I say that you buy these two companies is very dangerous. And eventually they both collapse. So you got to watch the debt to EBITDA ratio. This one must be less than 3. Debt servicing ratio, this one must be less than 30%. Interest coverage ratio, this one at least 4 to 5 times. Okay, so you have to look at all these things. Understand? Okay. Now, again, there are a lot more criteria I look at, like return on equity, return on invested capital. I look at cash conversion cycle. I look at accounts receivables. And I can't go through everything today because there's a lot more to cover. But today, I've got less than 3 hours. In fact, I've got only half an hour left. So I'm talking very fast because I want to teach you as much as I can today. But there's a limit to how much I can cram in 3 hours. Do you know it's really about 2.5 hours? Then, sorry, it's about 2 hours, 15 minutes. Okay. How do you find that what you've learned so far is useful? How do you find that if you can apply what you've learned, it can transform your investment results? And how you find that you now realize some of the mistakes you've made in the past? Cool. Great. So again, today I want to share with you as much as I can, but today I can only cover less than 3% of what you need to learn. That's why take the investing course, the whale investor course. Because in the whale investor course, you will learn everything. You will learn everything about how to invest. And once you learn everything about how to invest intelligently and safely, you have the confidence to manage your own money. And you have no more fear of recession. You have no more fear of market crash. You've got no more fear of what Trump will tweet. Because you know that no matter what happens in the short term, market goes up and down short term because of emotions and market manipulation, you don't care. Because if you hold good companies and you add only when they're undervalued, you will do very, very well over time. Your portfolio will compound and compound over time. Okay? So let me share with you a bit more. All right, let me teach you guys a bit more. Now, like I said, we only want to focus on what? The top 1% of companies in the world. Okay? These are companies that consistently grow their revenue, profits, and cash flow. Correct? Remember, a business is a money-making machine. The more money it makes, the more it's worth. So good companies, over time, what will keep increasing? Good companies, over time, what will keep increasing? The intrinsic value, right? That will keep going up over time. The company will be worth more and more over time as they make more and more money over time. But will the share price go up in a straight line? Will the share price go up every day, every week, every month to reflect the value of the business exactly? No. So in the short term, the stock price doesn't always reflect the value of the business. The share price is driven by emotions, manipulation, and news. So sometimes in the short term, when there's good news, when there's manipulation, the share price can go, can go way above the valuation. That is called like a bubble, right? Overpriced. But then when there's bad news, oh my God, Trump is imposing tariffs. Oh my God, there's another war. Oh my God, the Fed raising interest rates, right? Then the price can go, But then the cycle will repeat. Good news again. Oh, good news. Oh, bad news. Good news, bad news, good news, bad news, good news. And then recently, last few weeks, bad news. Okay? So what do we call this? We call this volatility. Now, as intelligent investors of great companies, do we like volatility? Do we like volatility? Yes, we love volatility because volatility creates what? It creates the temporary mispricing of the business. I repeat, write this down. Volatility creates the temporary mispricing of the business. That means a business that is worth, let's say, $500, okay, could temporarily be selling at $200 because of manipulation, because of panic. So this is when it gets under what? Value. Okay? But then a company that's worth 500, could it also sell at 800 sometimes because of hype, because of optimism? Yes. Then it is overvalued. So you tell me as an intelligent investor, when is the safest time to buy shares? And which will give you the highest returns over time? Do you want to buy in area here? Let's call it area A. Or do you want to buy here? Let's call it area B. A or B, guys? All of you type B. Correct. You want to buy at area B. Now, that's what you say. But is that what you do? I hope, okay? Because most retail investors, 90% of retail investors who are not trained in investing, they always buy at A. And not only that, they always buy somewhere here, right near the top. Why? Because most retail investors, they buy and sell based on what? Emotions and reading news. So when they see the share price going up, going up, going up, going up, going up, going up, they say, wow, everyone make money. I want to make money. They got the fear of missing out, right? And that's when the company will show all the good news. Oh, the company is doing well, the revenue is growing, the profit is growing, and they get excited, they jump in. But by the time they buy, what happened? The price already went up. If everyone loves a company, that means it is overpriced, right? So they buy it there. And after they buy it, what happens? It may go up a bit more, right? But shortly later, it will drop. Then when it drops, everyone panic, everyone sell. When they see everyone sell, everyone panic, they also panic. And that's when the news will come out bad. Oh my God, Trump is having more tariffs, the interest rates are going up, and this and that. Yield curve inversion. Michael Burry said, they sell. So they end up selling here. So they buy high, sell low, buy high, sell low, buy high, sell low. How many of you have done this before? Every time you get excited, you buy a stock, it drop. After you sell, it go up again. Have you that happened to you before? Now, if that has happened to you before, it's not because you are unlucky. It's got nothing to do with luck. It's because you're like most people, you're buying and selling based on emotions and reading the stupid news. Okay? So if you want to make money consistently, like me, right? Like my students, where we make, we beat the market consistently year after year, then you have to train yourself to go opposite of everyone else. So in other words, you only want to buy great companies. Listen carefully, you only want to buy great companies when they're undervalued. Now think about it. When is a great company undervalued? When there's good news or when there's bad news? That's right, when there's bad news. When there's bad news, you only want to buy a good company when there's bad news, because that's when you buy underpriced. Okay, and when is a company undervalued? When people are confident or people are fearful? Optimistic or fearful, correct. So Warren Buffett has always said, be greedy when everyone is fearful. All right? Does this make sense, everyone? Now, so currently in the market now, are there great companies that are undervalued because of recent bad news? Yes. Okay, there are. So you want a few examples? Okay. Now, before that, let me answer this question. So some of you are asking, Adam, how do I... Okay, by the way, sorry, let me just draw that again. Okay, sorry, let me just draw that again. So some of you are asking, Adam, how do I know what is the intrinsic value, right? That is the most important thing. Oh, by the way, let's look at the next thing over here. So let's look at Meta. Meta owns Facebook, they own Instagram, they own WhatsApp. And over time, you can see that their intrinsic value keeps going up. Why? Because they make more and more money over time, right? And this is the time to buy. You want to buy when the share price is below the intrinsic value. This is the time to buy. 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 Now, this is the time to buy. You buy when it's below the green line. Now, two questions for you. Number one, is Meta a great business? Okay, that's the first question. Huh? Second question, how do you know what is the intrinsic value? Because once you know the intrinsic value, then you know when the price is below the intrinsic value. Then you know when it is selling cheap, right? Okay, so first question, how do we know it's a great business? Again, let's look at Meta. So what did I tell you earlier on? A great business has what? Number one, consistently growing revenue, profit, and cash flow, right? Okay, so if we look at the long-term financials, again, you can change to a bar chart, right? So is the revenue growing consistently, yes or no? Is the profit growing consistently, yes or no? Now, doesn't mean it goes up every year. Certain years it goes down. There are years it goes down, as long as it's on an uptrend. Free cash flow also consistently growing, right? What else did I say that makes a great business? What else did I say? It must have a wide economic moat. So if you go to Oracle IQ here, straight away it can analyze the moat. What's the moat? How strong is the moat of Meta? The moat is 8 out of 10. It's got one of the strongest moats in the world. All right? Where does the moat come from? Brand loyalty, 6 out of 10. Wait. Barriers to entry, 5 out of 10. Switching costs, 5 out of 10. Network effect, 10 out of 10. So this is the most important thing, the network effect, 10 out of 10. Okay? Economies of scale, 9 out of 10. So this gives a very strong moat. Financial strength, also very strong financially. All right? Very strong moat. Very profitable. Very predictable. Okay? Now, how do you calculate the intrinsic value? In the whale investor course, you're going to learn how to calculate the intrinsic value manually, right? Using our intrinsic value calculator. So when you purchase the whale investor course, later you can get it at a big discount. It comes with all these intrinsic value calculators. Where you put in the free cash flow, you must normalize it. Okay, that means you need to take the average 5-year capex to normalize the capex. Okay, the total debt, the cash and investments, the projected growth rate, the shares outstanding, and you'll calculate what's the intrinsic value, $816. So what's the share price now? Now it's 594. 594. So right now it's selling at what? 27% discount to the intrinsic value. Is it a pretty good deal? Yeah, it's a pretty good deal, right? Right? It's selling 27% discount to the intrinsic value. Okay. So again, if we look at this chart over here, okay, right now it is selling at a discount. Okay. Now, can we always predict the exact bottom to buy? Can we always buy right at the bottom? Can we buy always right at the bottom? No one can predict the exact bottom. As long as it's below the green line and it goes to a support level, okay, that's when I will buy slowly, right? So for example, let's say this is the first support level, I buy a bit here. It dropped to the second support level, I buy a bit. Drop to the next support level, I buy a bit. Okay? So if you buy at support levels, your average price, let's say your average price is somewhere here. So you can't always buy at the bottom unless you're super lucky. Huh? But even if you buy somewhere here or somewhere here, will you do very well? You buy somewhere here. You buy somewhere here. You don't have to buy at the bottom. Would you? Yes, you do very well. So don't always think that I must buy the bottom. No one knows where the hell is the bottom. Okay? So if you look at Meta, okay, let me show you Meta. Okay. So the intrinsic value is about 815. Okay, that's the intrinsic value. Okay. So now it's selling at 594, right? And it's at a support level here. So these are what we call support levels. Okay. So in the whale investor course, I will teach you how to draw these support levels. These are where I will add slowly. Okay. And if you subscribe to the UIP, I will draw the support levels for you every month. So every month, all the great companies, I will update the support levels. I will update the intrinsic value. And so basically, you don't have to do the work. I do all the work for you. So people who want me to do all the work for them, they say, Adam, you cook for me. I just eat. Okay, then that is the ultimate investors playbook. And that one, you also get to see what I buy and sell every day in the UIP subscription. Okay. So that's Meta. How about NVIDIA? What do you think about NVIDIA? Is NVIDIA cheap or expensive right now? Again, you can calculate the. Okay, first of all, is NVIDIA a great business or not? NVIDIA is, look at that, all rank top, high predictability, high profitability. Look at that, fantastic. If you look at the financials, look at that. The revenue, the profits, the free cash flow. Very strong, right? And how about the moat? Is it a strong moat? Let's check the moat here. My God, this is 9 out of. This is 9 out of 10. Is one of the strongest moats in the world. This is a damn good company. But is it cheap? Is it cheap? Well, again, if you do the intrinsic value calculation, again, in the whale investor course, you will learn step by step how to key in all these numbers, how to key in all the numbers, and how to calculate the intrinsic value, $210. That's the valuation. What's the share price now? Share price is now 178. So it is slightly undervalued by 15%. Yeah, you can download this intrinsic value calculator once you enroll in the whale investor course. In a short while, I'll be telling you about the course. There's a 50-60% discount today on all the courses. All right. Now, if you're too lazy to calculate this yourself, I'm very lazy. I'm very lazy. How? Don't worry. In the UIP, I will value everything for you every month. I'll update the valuations as well as the buy levels. Okay. So if you look at NVIDIA, what are my buy levels? These are my buy levels. Okay. So there, intrinsic value 210. My first buy level is 177. Then next buy level 153, next buy level 122, next buy level $90. So right now it's only at the first level. So if I don't have any NVIDIA shares now, if I don't have any shares now, can I start buying a bit now for me? Can I start buying a bit now? Yes. But how much would I buy? If I want to buy 100 shares, how many would I buy now? I'll buy only 20 shares or maybe 25 shares. Okay? Because I need to have enough cash to make sure if it drops to the next support level, I can still add more. Okay. Now, someone asked me about Palantir. Now, Palantir, my last valuation is $143. Okay. $143. So right now it's still overpriced. It is still overpriced. So only when it drops to 125, 110, then I will buy more, right? Then I'll buy more because I already have quite a lot. I already have quite a lot. If you look at my Palantir, let me see. Yeah. So you can see my average price is $9, right? I bought at $9 average price. Now it's already at 156. But if it drops to 110, 100, I'll buy more back. All right. SMCI, I wouldn't dare to touch that one. Okay. Yeah, I know a lot of you asking me about this and that. I can't answer everything, but I'm just showing you some of the most popular ones. Okay. Some of the most popular ones. Someone asking me about, Singapore. Okay, let's look at DBS Bank. DBS, like I said, is one of my biggest holdings. And I own over $1 million of shares in DBS right now. And if you look at DBS, let me just show you DBS Bank. Okay, you can see now the share price is $53, right? But what's the intrinsic value? It's only $33. Okay, so it's a bit expensive now. All right, it's a bit expensive now. So that's why now, even though I love DBS, I love it, but I'm not gonna buy more because it's a bit overpriced now. Okay, it's a bit overpriced. And if you look at the monthly candles, right? Look at that. Wave up, wave down, 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 wave up. You think I buy here? Do you think I buy here? Do you think I buy here? Do you think I buy here? I dare not buy. I'll wait for wave down. I'll probably only add at about $40. All right. If it drops to 40, then I'll buy. Drop to 36, 33, or I will sell my mother's house and buy more DBS. But now, a bit expensive lah. Okay. Yeah. So whatever you learn in the course, you can apply to Singapore stocks, Malaysia stocks. Any stock is the same concept here, right? So that's DBS Bank. Okay, let me finish what I need to finish. Later, if there's time in the Q&A, then I'll look at the other stocks that you guys are asking me. Some of you are asking me United Health and Novo Nordisk and Microsoft. Okay, let me do that later, but let me cover some more things first, yeah? Okay, by the way, again, am I only buying AI stocks, AI related tech stocks? Am I only buying AI related tech stocks? No. Okay. I'm also buying non-AI related stocks. Why? Okay. So, like, I'm also buying healthcare, I'm buying software stocks, or I'm holding software stocks and other industrial companies like Waste Management, Motorola. All these are not AI related. These are not AI related. Okay. But I'm also buying some of them. Why? Why is it important to also buy non-AI companies? Because we need to diversify, right? Now, right now, okay, by the way, this was the dot-com bubble in 2000. Okay, this was the tech stock, kabam, right? So, like I said, in my opinion, if you compare AI now with the dot-com, in my opinion, we are probably somewhere equivalent to 1998 or 1997. Okay? So that is where I think we are now. Okay? So will there be a bubble? Eventually, maybe, but not yet. Okay? So we have a long way to go. We have a long way to go before it gets to a bubble. We are a long way to go. All right? Long way to go, right? Now, eventually, let's say there's a bubble, okay? And Nvidia becomes super expensive. Amazon super expensive. Everything's super expensive. What do you think I'll do? What do you think I'll do? I will sell already. That's right. Once the price gets too overpriced, I will sell. Now, do you think I can? You think I can time and sell right at the top here? You think I'm so lucky to sell at the top? No. I will probably sell somewhere here, or I'll sell somewhere here, or I'll sell somewhere here. And after I sell, it will probably go higher. Probably lah. I can't time the top lah. But if I can sell somewhere here, is it good enough? Do you think it's good enough if I sell somewhere here? Yes. And after I sell, eventually when the whole thing collapsed, what do you think went up? In the dot-com, when all the tech stocks collapsed, what went up? What is the green thing that went up? The non-tech stocks. That's right. At the time, Gillette, Washington Post, Coca-Cola, Moody's, American Express, all the non-tech went up. So that's why for me, I've got a diversified portfolio so that even if the AI stocks temporarily drop, like the last few days, the AI stocks temporarily dropped, but my non-AI stocks have been going up, like my healthcare stocks. Okay, so in the course, I'll teach you how to build a diversified portfolio so that it will do well in any economic situation. Now, let me repeat this. Write this down. To be a successful investor, must we be able to predict where the market is going in the short term? To be a successful investor, must we be able to predict where the market will go in the short term? I wish we could. I wish I could. But the reality is no one can predict where the market will go in the short term. No one can predict when is the next recession. No one can do that. So to be a good investor, we don't need to predict. We just need to hold what? Good companies that are diversified, so that no matter what happens, recession or no recession, high inflation or low inflation, cut interest rates or not cut interest rates, whatever happens, our portfolio will be resilient. Isn't that better, everyone? Instead of predicting, just build a good portfolio that can weather any storm. That is what I do. That is what I teach my students to do. Okay. So let me summarize what you're going to learn in the Whale Investor course. Number one, you're going to learn how to identify the strongest companies in each industry, the strongest companies in healthcare, the strongest companies in technology, the strongest companies in financial sector, right? These are all the different sectors. Next, you will learn how to calculate the intrinsic value, so you know what it's worth, right? And once the price go below the intrinsic value, you learn where to add at the technical support levels. So you will combine both technical analysis with the fundamental analysis. Then you are unstoppable. Okay. Number three, you will learn how to build a low-risk, diversified portfolio. Okay. And number four, you will learn when to sell. Okay. How do you know when something is too expensive? You start to get out. Or if a company is losing its competitive advantage, or you find an even stronger company, get out. Replace with the stronger company. Replace with the stronger company. We always want to replace with the stronger company. So I've been teaching this class now for 20 years. My first investment class was 2005. This is the 20th year. And in 2016, I started to teach online. So we can now teach students from all around the world. You don't have to come to Singapore anymore like the past. You can learn from the comfort of your home on all our online videos, right? So you can see my students from all around the world. People like Tony, he said, "Hello, Sifu Adam, I'm from Vietnam." And he said, "I'm very happy because my investment results in the US market in 2023 once again exceeded my expectations." Right? He did 131% here. And then you've got Adrienne. She said, invested in your value momentum investment, which is the Whale course this February, started to clean up and revamp my portfolio in late March. And now here I am, up 49%. And many of my students have zero investing experience. Many of them never invested before. Some of them have, some of them have not. KK, he says, 4 years ago, someone introduced me to open a broker account. At the time, I knew nothing. My account went negative. I always ended up buying high and selling low. I would FOMO and add positions when prices went up and panic sell to cut losses when they drop. Since May this year, I came across Adam's webinar for his masterclass and enroll and learn from the experts. Since then, my journey has completely changed. I managed to earn back what I lost in the past. And now my portfolio has even outperformed the S&P 500. And people always ask me, "Adam, out of the thousands of students around the world, which students are you the most proud of?" Can you guess? The students I'm the most proud of are my two daughters. All right. So that's my younger daughter, Sam. She just turned 20, just got her driving license. In fact, now she's driving me around everywhere. And Kelly, who is 21, coming 22 years old. And I started teaching them investing when they were about 12, 13, 14, 15 years old. Once they were 18, they both opened their account with Interactive Brokers. And I gave them each 5,000 to start. And I said, from here onwards, you make your own money and you put into your own account. And one of the proudest things for me is that they are both studying. They're still studying in the university. During their holidays, without me telling them, they find part-time job. My second daughter is in NTU studying. She started an online marketing agency already. And she has got clients paying her retainer of 2,000 a month retainer. So she's studying and running her business at the same time, right? So they're both making money from their part-time job, from their online business, and all their savings they put into Interactive Brokers. Okay. Today, both of them, their two accounts are already over close to 30,000 US. Okay, and they're only 20 years old. Now, I'm a bit embarrassed. Okay, I wouldn't say the word embarrassed. I'm actually quite proud. I showed you my account. So far, I'm up 13% this year, right? I showed you, right? Guess my two daughters. Bloody hell. Happy for them. Sam is up 20% this year. Kelly is up 26% this year. So my two daughters beat me this year. Okay, they both beat me this year, right? But I can tell you that what I'm the most proud of is not the fact that they are beating me in terms of their investment returns, but the fact that they have learned this skill. Last time my greatest fear was that, eventually if they inherit all my money and they don't know how to manage it, they listen to the stupid news, they listen to stupid analysts, and they lose everything. That was my greatest fear. That's why I wanted to teach them as young as possible. So now I've got no more fear. Now I know that, one day when they inherit all my money, they will grow even better than me. And I don't know about you, but I also have this fear that nowadays with AI, people who graduate entry-level jobs, can they find a job? Right? That's why my two daughters, I send them for a lot of AI classes. Okay. But I told them that even if you can't get a job, never mind. Right? You work is for fun. You don't work for money. Your money is made in the stock market. So now they know that their millions will be made in the market. They work in a job is for fun one. That is the thing you have to teach your children, because eventually AI will change this world. So whether it changes your life for the better or for the worse is your choice. It is your choice. If AI takes away your rice bowl, you cannot blame AI. You have to blame yourself for not learning to use AI, for not learning to invest in the next AI revolution companies. Okay, so we got to take action, right? Okay, so next $1 million question. Is it a good time to invest now? I think I've answered this question already. Now, this current bull market started in November 2022. So this current bull market is 3 years old. Okay. How long does the average bull market last? If you look at, these are all the past bull markets. This one lasted 5 years. This one lasted 6 years. This one lasted 5 years. This one lasted 11 years. This one lasted 12 years. These were the past 1, 2, 3, 4, 5 bull markets. This bull market is only currently 3rd year. So based on the normal bull market, we are only halfway. We have got at least 2 to 7 years left. But like I said, this is not an ordinary bull market. We are in what? We are in an AI super cycle. A super cycle that will last 10 to 40 years. Ladies and gentlemen, we're just at the beginning only. We're just at the beginning. So when people say, hey, Adam, why don't you sell your NVIDIA? You're already up 1,000%. I say, are you mad? Adam, your Palantir up so much. Now are you going to sell? I say, are you mad? Adam, Google up, so are you going to sell? Are you mad? No. Because in the next 5, 10, 20 years, these companies are going to further dominate the entire world. Okay? Again, let me make it very clear. Whatever I said today is not a recommendation or advice for you to buy or sell any stock. I'm just sharing with you my thoughts, my opinions, which could be wrong. I could be dead wrong. I could be the idiot. Maybe I'm the idiot, who knows? But I'm telling you what I'm doing. I'm telling you what I'm holding, what I'm buying, what I'm selling. I'm telling you how I manage my money. but you have to ultimately make your own decisions because I can't advise you how to manage your money better than you. Okay? Now, next question people are asking is, Adam, for the next few months, do you think the market will go up or down? Now, I can't predict 100% because I can't read Trump's mind. I don't sleep next to him. I don't know, right? I can't predict what Putin will do. I can't predict what the Fed chairman will do. I can't predict all that. But based on existing fundamentals, I think that the chance of the market continuing to rebound in the next few months is still quite high. Why? Because number one, company earnings have been very, very strong. Nvidia released very strong earnings and raised their projection. Amazon, Alphabet, Microsoft, all very strong earnings, okay? Even the banks. Next, Trump is cutting corporate tax significantly. That would boost earnings growth. The Federal Reserve may or may not cut interest rates in December. We don't know. But next year, they will continue to cut. And from 1st December, they are going to start increasing the money supply. For the first time in 3 years, they will increase the money supply. Next, there are 7.4 trillion of cash that is on the sidelines in money market funds. This is fuel for the market when it eventually goes to the market. Weak US dollar is bullish for US stocks, although the US dollar has been rebounding. If you guys follow me on Facebook, I actually showed the technical charts that the US dollar actually bottomed last month, and it looks like US dollar versus Sing should go up to about 1.34, 1.35 in the next few months. Again, I can't predict 100%. This is just my guess, okay? And of course, finally, the AI revolution. The amount of AI spending build out will continue at least for the next 5-10 years, okay? So these are the bullish tailwinds for stocks. Okay. So how do you become a consistently profitable investor? Like me, like my students. How many of you face some of these frustrations? Like you don't know what to buy. Adam, there's so many stocks, what do I buy? You don't know how to even start an account. Some of my students, they don't even know how to open an account with a broker. Don't worry, it is very normal, okay? Or you bought a losing stock, now what do? Do you hold on and suck your thumb and pray every day? Or do you get out, right? Or you bought at the wrong time, you sold at the wrong time. You bet everything on one stock and died. Or you panic during market crashes. Or you have got years of inconsistent profits and losses. Okay? How many of you face some of these frustrations? Okay? If you do, you are not alone. So stop wasting all your years on trial and error and struggling on your own when you can fast track your journey with us, with me. Okay? So my team and I, we specially put together a fast track package to help you to cut short your learning curve and not waste time going in circles. Make money, lose money, make money, lose money, don't make money, don't make money. Cut all the time wasted. Okay? So the Investor Fast Track Mentorship, we put together 3 products for you at a super attractive price. Okay, what are the 3 products? Number 1 is the Whale Investor course. Number 2 is the Stock Oracle software. And number 3 is the Ultimate Investors Playbook. 3 into 1 for you today. All right, so let me run through the first. Now, the Whale Investor course is a full 12-lesson video tutorial that will teach you everything about what to buy, when to buy, how much to buy, and when to sell. And this is pre-recorded. The videos are pre-recorded. They are updated constantly when there's new material, and you learn at your own pace anytime, anywhere. You will have lifetime, for now, lifetime access to all the videos, including all the updates. So you buy one time, you can watch forever. It's like unlimited lifetime Netflix account. Okay. So what will you learn? Number one, you will learn all the stock market basics. So for those of you who have no idea, I don't know what is PE ratio. I don't know what is revenue mean. What is a share? How does a business make money? Okay. So I'll cover all the basics. Next, you will learn how to invest in ETFs, which is the simplest way to get started. All right. And what are the entry and exit rules for ETFs? There are hundreds of ETFs. So how do you select the strongest ETFs? What are the best China ETFs, the best US ETFs, the best India ETFs? Every market, how do you choose the best ETFs? Next, you will learn fundamental analysis, how to read businesses inside out. So you know, is it a great business or is it a lousy business? You learn how to read financial statements very simply, what to look for in the income statement, the balance sheet, the statement of cash flows, how to identify growth potential and danger signs, how to screen for the best companies in the market. You know, everyone who takes my course, they always have the same complaint. You know what's the same complaint? The same complaint is, Adam, why didn't I learn this 5 years ago? If I did, my life would be very different. If I learned this 5, 10 years ago, I would never have bought HiFlux. I would never have bought Nobel Group. I would never have bought SPH. Right? Because once you learn all these things, never again will you buy a lousy company because you know exactly what to look for. You become very, very strict and only buy solid companies. Next, you will learn about stock valuation, how to calculate the intrinsic value. So you know, is it expensive or cheap? Stop guessing and look at the actual numbers. Then you learn technical analysis, how to read the chart patterns. How to read, is it wave up or wave down? What are the support levels? So you know exactly where to add, exactly where to start selling. Not based on luck, based on price action. Okay. Then we put everything together in a 7-step value momentum investment formula. I call this my 7-step analysis. So before you buy a stock, you want to make sure it passes the 7 steps. Then how to build a winning portfolio that is resilient, that can withstand any market. How to find the best investment opportunities and when to sell, exit rules. Then I spent a lot of time on psychology. Okay. A lot of investing success is learning to rewire your mind. So you think differently from everyone else. You think like a winning investor. You don't buy and sell based on news, based on emotions, based on listening to the predictions of people. You buy and sell based on numbers, based on facts, based on data. How to choose a stockbroker that meets your objective. How to start opening a brokerage account. And how do you turbocharge your portfolio? Right? By using certain techniques like options and stuff like that. So the Whale Investor course, once you enroll later, you can download the intrinsic value calculator as well as the Excel portfolio tracker and Excel dashboard. Okay. So again, these are my students from all around the world. This is Anthony from Australia. He said, I'm very proud to say my portfolio is up 52%, about 4 times of the S&P 500. People like Oscar from Sweden, he said, hello, Adam, buying this course was one of the best decisions I've made in my life. Last year, I didn't have a clue what I was doing in the stock market. I ended 2018 with my portfolio down 17%. Early January, I bought this course and now up 43%. Just want to thank you for the value that you provide in this course. Okay. Now, how much do you need to start investing? Do you need a few $1,000,000? Do you need hundreds of thousands? No. The good news is that in the US market, you can buy 1 share or buy fractional shares. Okay. So there's no minimum investment. Okay, just double check, guys. Can you guys still hear me just to check? Yes, okay. So I tell people that even if you have a small amount of savings to invest, whether is it $1,000 savings or 500 or 5,000 or 10,000, start investing. Why? Because if you don't invest with small money will never grow into what? Big money. You got to start somewhere. I started very small as well. I started investing at 17 years old. I'm now 51. I've been doing for 30 years. When I first started, I started with just a few thousand. My two daughters that started at 18, they only started with 5,000. And then from there, they work on their own, they save their money, and now they've grown it to close to 30,000 US dollars. You got to start somewhere. And every day you delay, every month you delay, your money is losing value to inflation. And every month and every year you delay, you're delaying your financial freedom, your financial security, and you'll take longer to get there. So why delay? Just start. Okay. I'd like to share with you one last lesson from my students. This is Kedar from Nepal, my first student from Nepal. He said, Adam, this year I got 80% return. But from 2011 to 2018, I lost everything. 100% of my money. I wish I had known you around that time. I lost 7 years. This guy is Luke Sak from Thailand. He said, thank you so much. This is one of my accounts. Pretty much all my accounts are good like this. I've made back all my losses in the last 20 years. 20 years, you know. Okay? How many of you have lost money before because of bad investment decisions? If you have, you are not alone. Many people have lost money, myself included. When I started at 17 years old, I made all the stupid mistakes that most people made because I had no mentor. I was trial and error. For the first 7 to 8 years, I went in circles. I make money, I lose it. I make money, I lose it. But I didn't give up. I kept pushing forward. I kept learning from my mistakes. I kept reading about how the best investors do it. And then when I finally learned how, I make everything back. Today, I'm not saying this to show off, but to inspire you. Every year, my capital gains at least about 2 million. My dividends alone is now about 600K every year. So every year, I make at least 2 to 2.6 million every year in the market. People say, oh, you're so lucky. No, it took me 30 years to get here. It took me 30 years to get here. No. All right. So I'm here to tell you that your past does not determine your future. It doesn't matter how much you lost in the past. It doesn't matter how many mistakes you made in the past. What matters is what you do now. Is the decisions you make today, the action you take today, the strategy you employ today that will determine your financial destiny. And people ask me, Adam, must I learn it from you? Can I learn it on my own through trial and error? The answer is yes, you can learn it on your own. You don't need me. But if you learn it on your own, I can guarantee you it's going to take you at least 5 to 6 years of losing money, of going in circles before you finally realize the right way. I know because I took 7, 8 years. So if you can take 5 years, you're better than me. So the reason people take this course, the Whale Investor course, is they say, Adam, I want to cut short my learning curve. I don't want to spend the next 5, 6 years losing money and wasting my time. I want to learn everything the correct way now so that 5, 6 years from now, I'm already halfway there to my financial target, right? So it's up to you. If you feel that you don't have much time left, you don't want to waste time anymore, then this investor course will help you to get there faster, all right? It is really up to you. Now, when you enroll in the Whale Investor course, you will get a lifetime access to my private chat group on Discord. And I'll be in a chat group with you 7 days a week, up to 15, 16 hours a day. Any question you have, you ask, we're there to help you. You say, hey, I found this stock. What do you guys think? That's where you get feedback from each other. You direct a question to me, I will answer you personally. I'm there 7 days a week. All right. And it's a very nurturing group where the group of students together, we encourage each other, we support each other, especially in times when the market is volatile. You get a lot of emotional support here. Because to do it alone is very difficult. When you invest alone, you tend to break the rules. You don't follow your investment plan and you get distracted and seduced by get rich quick schemes and seduced by short-term things that don't work out, right? But with the group, it keeps you grounded. These are what my students say, right? Is VJ, he said, seriously, I did not expect this kind of support from Adam on Telegram. Now, it used to be on Telegram, now it's on Discord. We really changed already. Huh? He answers everyone and it's a great online course, but the support we get in this community is matchless. I keep asking my friends to join the course as well. This Sunny from the US, he said, Adam, I can't say enough. You're the best teacher in the whole wide world. I've been to many paid courses, but no one out there would take time after hours, whether on a weekend or weekday, to answer questions and steer us students in the right directions as you do. Every dollar spent on your course is worth millions. Thank you very much. And Ronnie said, had I not belonged to this group, I could have been screwed big time. I wish I enrolled in the course earlier. They all say the same thing. I wish I came earlier. They all say the same thing. All right. He said, I tried to learn on my own. I lost a bit of money, and the best decision I made was to sign up for your course. In 3 months, I tripled my course fee in the markets. This is John from the US as well. Okay. And again, I don't want to take too much time on this because you get the point. Okay. So again, the Whale Investor course, lifetime access, on demand, watch anytime, anywhere. Next, some people say, Adam, okay, I've learned how to invest, but I don't have much time to analyze stocks. Okay, I want to fully automate the stock analysis so I can make decisions in minutes or seconds and not hours. So my team, we spent 4 years to develop this thing called Stock Oracle. And Stock Oracle is a software that will help you to apply what you learn in the Whale Investor course, where with Stock Oracle, you can quickly analyze any stock listed in the US in seconds, right? Next year, we will have Singapore stocks and Hong Kong and China next year, all right? But now it's only US listed, and there are a total of 16,000 US listed stocks in Stock Oracle. That includes the foreign companies listed in the US, okay? So that's Stock Oracle. You will get it today as part of the package. Now, next, so you get a Whale Investor course, you get Stock Oracle. Now, Stock Oracle, you get a 1-year access, a 1-year access. If you want to renew after that, it's about 200 a year, right? 200 a year if you want to renew after that. If you don't want to renew, it's also fine, all right? Because you will also learn how to analyze stocks manually without Stock Oracle. Next, some people say, Adam, I've learned how to invest. I know exactly how to invest. I got the software, but I want to know what you're buying. I want to know what you're selling every day. I want to know that what's in your portfolio. I want to see exactly how you manage your investments every day. Then that's where we have got the UIP, the Ultimate Investor's Playbook, where you can watch me invest every day, like an apprentice, okay? So you want to leverage on my research. You say, Adam, I want you to do all the research for me so I can just leverage on all your research, okay? And I want to know what you're buying and selling every day. Okay, so that's the UIP. So with the Ultimate Investors Playbook, every month you will get special deep dive research videos from me where I'll show you exactly what's happening in the market. You will get to see a deep dive of my portfolio every month. You can see exactly what's in my portfolio, every single stock, the percentage allocation, my average cost, my market value, everything every month. I go through with you. And you get my updated, what we call research reports on every company. So every company I buy, you get all the in-depth research reports. These are my notifications. So for example, yeah, sold my balance of the trade on Duolingo at 302, made a 1.8 hour profit, right? Then added waste management at 199. I do a screenshot. Now, bear in mind, these are not recommendations. I do not recommend you buy or sell these stocks. What I do is I show you what I buy. After I buy it already, I do a screenshot of my portfolio. This is what I bought. I'm not saying that you buy. You make your own decision. I just share with you what I buy and sell every day, including my options trading. I'll show you the option trades I do every day. All right. So Matthew says, hi, Adam. I saw lots of inspiring success stories. Like to share mine as well. This is my progress for 1 year. I renewed and now second year of your UIP program and continue to support UIP. My option premium collected is 7,005, up 79% return past year. This Roman said, dear Adam, I enrolled in the course and now second year of UIP. I think it's the best investment I've made in 10 years. I put this term because I got married before that. Year to date, I'm up 42% only through passive investing, which is double the S&P 500. This guy, Venki, okay, by the way, Venki, he took this course at 80 years old. Okay, 80 years old. He took the course and now he's 80, I think he's 86 years old right now. He has done so well, right? He said, I'm happy to inform you I've achieved 95,000 profit on my 300,000 investment across 3 brokerages in 2 years on your UIP stocks. He flew all the way down to Singapore from Texas for 1 day to say hi to me, to take picture with me, and then he flew back. All right. And now he's 86 years old and he manages money for his 2 adult children. So when people say, Adam, I'm too old to learn this. Hello, this guy started learning at 80 and together with me in my community now, I think he's 85, 86 years old. All right. This is Christopher. I just interviewed him. Okay. We'll be sharing his video on YouTube very soon. Say, hi, Adam. It's been 2 years since I opened my account with Interactive Brokers. Subscribe to UIP. My portfolio is up 121%. I'm just a taxi driver in Singapore and not well educated. However, I'm proud of myself for taking up the investment course with Piranha Profits. Very fortunate. Currently, my net worth is up to 300,000 US dollars. Okay. Okay. So that's the entire fast track journey. Once you enroll in this fast track mentorship, you can watch all the lessons at your own pace when you're free. Okay. And then you join the chat groups where you can check out what I'm buying and selling, discuss stock ideas with your fellow investors, and get guidance from me and my coaches every day, 7 days a week, 18 hours a day. Then with Stock Oracle, with one click, you can also do your own research. You can wait for good companies to go on a discount, invest and build a portfolio of at least 10 stocks or more, close your eyes, review once a quarter, and then smile as you see your wealth grow over time. Okay? That is the whole process, your whole journey. So these 3 things you will be getting. Now, what is the tutorial fee? The Whale Investor course by itself is 1,899 US dollars. Again, this is lifetime access. Lifetime access. Stock Oracle, the normal retail price is 497 US per year. But once you are in Stock Oracle, you can renew at 200 plus US if you want to renew it second year. Okay. The UIP normal retail price is 1,009 per year. All right. This is an annual subscription. This is annual. This is annual. This first one is forever. Okay. This one is unlimited. Unlimited. This is both are annual renewal, which you can choose to renew or not. It's up to you. So the total retail price of all three products are 4296 US dollars. Like I said, black market is the biggest sale of the entire year. Some people wait the whole year to buy during this time for a limited period. And so when you enroll, when you buy it now, you'll get my monthly newsletter as a bonus, 2 additional months subscription to UIP. So that's total 14 month subscription. And free additional 2 months subscription to Stock Oracle. So total 14 month subscription. Okay, so you will get everything today for only 1568 US dollars. This is insane, crazy value. I can tell you this, no other organization, no other person will give you this kind of value. No one. Okay, so that's 63% off. Oops, sorry. 63% off the normal retail price. If you want to grab this offer now for a very limited period, scan the QR code on the left or click on this link there that we will post on the chat bot. Okay, chat box, correct. Now, for those of you who only need UIP, all right, don't worry, you can let my team know and they'll have a special renewal for you for UIP only. For those of you who already have the rest and just want UIP. In other words, you want the a la carte, yep, let my team know we've got special discounts for the a la carte as well, right? But for those of you who don't, then this is the best super value package you can ever get, ever, all right? Now, fast action bonus. Those of you who enroll in the next 15 minutes, okay, 15 minutes starting from now, you will receive an additional live stock investing jumpstart workshop conducted by my co-trainer YY, who has got a fantastic track record as well. In fact, he's got higher returns than me this year, okay, as well. I think everyone is beating me. My daughter beating me, YY, everyone beating me. I don't know why. But I'm very happy. I always say, a great teacher is someone who can teach people to be better than him, right? So I must be great because they're all better than me, okay? So this is a 3-hour live session to get started and it's worth $300. Next, you enroll at 1568, okay? And you will get that special bonus, all right, guys? So in a short while, I'll do a very quick Q&A, okay? And then I'll invite this person called Nazri, and Nazri will basically come up to share with you a Q&A on the administration. So some of you would have very common questions on how to enroll, on payment and stuff like that. All that Nazri will come and help you to get enrolled, right? For the admin and technical assistance, okay? So as you guys are enrolling, again, it's 1568 US dollars for this super value bonus. Let me ask you this question. Is investing risky? Yes or no? Is investing risky? Yes or no? The answer is yes. Investing is very risky if you don't know what you're doing, right? In fact, everything in life is risky if you don't know what you're doing, including getting married. In fact, recently my daughter got her a new boyfriend. Wow, drove her back home in a Mercedes convertible. Some more younger than her. My daughter's 20, the boyfriend only 18. Haven't go to army yet. Right? Anyway, so I told my daughter, I said that, getting married is the riskiest thing you can do in your life. Because if you marry the wrong person, you will suffer for eternity or for decades. And you can lose half of everything that you have, right? Same thing. Is swimming risky? Swimming is risky if you don't know how to swim. Driving is risky if you don't know how to drive. But if you learn how to drive, if you learn how to swim, driving and swimming are no longer risky, right? Same thing with investing. For most people out there who don't know how to invest, they say, I don't need to learn, I just do myself. It's very risky. I can tell you 99% will end up losing money. 99% will end up losing money because it's like they jump into the water, into the deep blue sea without swimming lessons. It's like they drive a car without passing their driving lesson, right? But if you learn how to invest intelligently, if you learn how to invest safely, then investing is relatively safe. And it gets you to where you want to go a lot faster than putting your money in the bank and get less than 1% interest rate. Okay? So I tell people that, the greatest risk you can ever take for you and for your family is to not invest. That is the greatest risk. Because if you don't invest and you leave all your money into your savings account, right, it's a guarantee that 10, 20, 30 years from now, when you can't work anymore, or you don't want to work anymore, your savings can't grow enough to fund your retirement. How many of you know people today who are in their 60s, 70s, and 80s, who have saved up all their life, but because they did not know how to grow and invest, today they find that shit, I can't afford to live comfortably in Singapore. I can't afford to live comfortably in Australia. I can't afford to live comfortably in the US because everything is like 5, 10 times the price it was when I was younger. How many of you have experienced? How many of you have seen that? Okay, and it's a situation that you don't want to be in. You want to make sure that, again, 10, 20, 30 years from now, yes, things are going to be more expensive. Inflation will push things even higher, but you want to make sure that by that time, your wealth would grow 10 times, 5 times more than inflation, so that you can afford to live comfortably. Even the day comes you cannot work anymore or you don't want to work anymore. Okay? Investing is not a get-rich-quick game. This is not a get-rich-quick game. This is a get-rich, slow, and steady and sure game. If you want quick money, I'm not the person for you. Okay? You want to make million overnight, I'm sorry, I cannot help you. But if you want to make sure that you'll be comfortable in your retirement, in your financial security, I can help you. All right? So with that, thank you for listening to me. I apologize because I've really overrun my time like crazy. I think I'm more than half an hour overrun. But I'm going to pass the session on to 2 people. Number 1, by the way, please stay behind for the next session by Alson Shu. Alson's a great buddy of mine, and Alson is the best when it comes to short-term trading. If you want to learn how to make money doing short-term trading in stocks, in futures, in crypto, he's the guy, all right? I've met many, many traders. He's the only guy I know who really mastered the art of market manipulation. So he's going to teach you how the market makers manipulate the markets. The last few weeks, the market dropped, right? Even though company report good earnings. Why? It's pure market manipulation. It's pure market manipulation. So he's going to show you how the market makers manipulate the markets in such a way that they induce the retail traders to sell at the bottom and buy at the top. And once you learn how they manipulate the markets, you will learn how to trade together with the manipulators and take advantage of it instead of being killed by it. All right. So he's coming up next. You got to listen to him. But before he comes up, make sure you enroll in this fast track mentorship because it's the best price you're ever going to get. And I'm going to pass the session on to Nazri, who's going to come up and he's going to share more about how you can get enrolled if you got any admin questions. All right, guys? So I'll see you tomorrow at 10 a.m. Singapore time, where I'm going to teach you how I trade options tomorrow. Okay, with that, over to Nazri.
Sorry for the technical issues. Okay, thank you, Adam, for the introduction. Okay, so all right, everyone. I think what a powerful session from Adam. We just saw him unpack the whole bubble and boom debate and show exactly how the next AI value leap is unfolding. I would believe, I think everyone would agree with me, it was truly eye-opening. I think before we head into Alson's next session, I'm going to spend just a few minutes because I don't want to over on the time to actually address some of the questions coming in about the investor fast track mentorship enrollments. So stay right here. Don't leave the room yet. We'll go through those questions first, then we'll jump straight into Elson's session in his room. Yeah. Okay, let me see the chat. A question from KT. Okay, so what exactly do we get in the mentorship? Okay, first and foremost, when you join the Investor Fast Track Mentorship, you'll get 3 core components. One is the Will Investor course. That's Adam's on-demand program, teaching his value momentum investing VMI strategy to help you find the undervalued stocks and also time your entries for long-term profits. For this Will Investor course, you'll get lifetime access. Okay. And then next would be you'll be getting the UIP, the Ultimate Investor's Playbook, Adam's premium annual subscription, where he shares his monthly stock research, portfolio updates, and market insights. So complete with all those deep dive videos, the one that he explained just now, and also real-time trade notifications. And if you sign up today for this Investor Fast Track mentorship, you'll get 14 months of full access in total. So additional 2 more months for UIP. And lastly will be the Stock Oracle Pro Plus, which is our AI-powered stock analysis platform that lets you evaluate and track US stocks using Adam's proprietary valuation and momentum metrics. Again, if you sign up today with this Investor Fast Track mentorship, you'll get 14 months of full access as part of the mentorship. So that's great value right there. I think together you'll be getting education, mentorship, and also tools. Everything you need to invest confidently the way that Adam does it. Yep. Okay, let me go through one more question. I think before we introduce to Elson, I think I saw a few of the chats asking, what if I have Stock Oracle Pro? How can I actually get on this to purchase UIP and also Will Investor course? We do have a separate bundle for that. Please look up in the chat. We're actually gonna send the link out in the chat. Yeah. So please do look up for it. Also for all those UIP a la carte, all Stock Oracle Pro a la carte purchases, the links will be there in the chat. And then lastly, once I sign up, how soon can I start? Immediately. So once your payment goes through, you receive an onboarding email from us with step-by-step instruction on how to access your 3 core products that I mentioned just now, which is the Will Investor course, the UIP, the Ultimate Investor's Playbook, and also the Stock Oracle Pro. So do look up for the email. Inside that email will have an onboarding link, a button. So press the button and it will lead you to a onboarding page and everything is there. So you can just go through all the steps there, follow the steps there, and how you can actually join Discord will also be found there. Yeah. Okay, so for UIP a la carte is 35% off, and there's an additional of plus 1 month. For Stock Oracle, it's 50% off with an additional of 2 months. So please take note, yeah, the links will be sent with my team under the chat. So please do look out for it. Okay? So as I mentioned, I think this offer is for a limited time. So please do take action now and purchase the bundle, the mentorship. Okay, I think what are the bonuses again? Okay, let me reiterate again. What are the bonuses again? When you enroll today, you'll get 1 times live online investing jumpstart workshop with YY. You'll also get 1 times live online Stock Oracle onboarding workshop with YY. All these are actually live. The session will be tentatively in January 2026. So you'll be notified when the date is actually nearing. And also for those who actually missed the session, not to worry, it will be recorded and be uploaded to your portal as well. And of course, the additional 2 more months for UIP access, you'll get 14 months in total. And also for Stock Oracle, you get 14 months in total. So that's a good value right there. Okay. Okay, so for I think we have also a question asking if I'm actually an existing Stock Oracle Pro member. So how can I actually sign up for this bundle? Not to worry, you can actually sign up to this bundle. What we'll do is that you'll actually have, we'll actually add the additional days, whatever remaining days that you have with Stock Oracle Pro, we'll convert it into the Pro Plus value and you'll have that additional days on top of it to top up. Yep, so not to worry. Everything, please ask in the chat and our team will actually assist you on it. Okay, I think that's all of the major concerns that I think we saw in the chat. I think that's about I think let me wrap up the whole admin questions that for this session. And I hope that clears everything for you guys before you get started. Everything's quite straightforward. No hidden steps, no fine print. Once you join, you're in. Okay, So like I mentioned again, the Investor Fast Track Mentorship, as I mentioned, isn't just another course. It's full ecosystem built by Adam and our team to actually help you grow your wealth and structure and support. So if you're ready to take the next step, again, please scan the QR code. And also, if you have any additional admin questions to ask, just ask inside the chat. Our team will assist you with it. Okay, so coming up next, we have Elson with his next session, Decoding Manipulation, the 421k Traders Blueprint. So if you ever wondered how market makers create hidden profit setups or how Elson caught that massive Zcash move, you definitely want to stay for this. So don't go away. He'll actually break down his price action manipulation strategy and show you how to write early breakouts and timely exits in today's AI-driven market. So stay right here. Elson's session is starting shortly. Thank you, guys.